Good morning. All right, so futures are higher after non-farm payrolls came in softer than the estimate by about 10,000 or something like that, I believe. Anyway, we have resistance. Again, there's that resistance at 283 on the SPY. 3850 is a level. We're just above it right now. We're fading back to 3850 on the futures. That's a level as well. Posted in the Gamma channel, there are some support and resistance levels and some ideas for today. All right, so we have 8 minutes to go for the opening bell. Good morning, everyone. This is your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, the 6th of January. And I'm waiting for the opening bell. All right, I'm going to mute you guys for a minute. I got a couple of things I need to do. All right, folks, we got 4 minutes to go. 383. We get above 383, we could see 385. That would be some resistance there as well. Alibaba is going green. Baba going green. All right, let's see. Let me get these guys up and running. All right, less than 2 minutes to go for the opening bell. All right. Let's see what's working here sector-wise. All right, we've got most of the sectors are green. Semiconductors leading again. Semis leading. Less than a minute to go. All right. Let's see. Futures up quite a bit. We're up. Just watch for a fade here. If we start to fade, maybe some puts. Good morning. Good morning. All right. There's your opening bell. All right, watch for a fade. Watch for a fade here. This is resistance. Maybe some puts. $375.
High tick alert plus 800. Extreme high tick alert.
Okay, so first 15 minutes, I'm not doing much of anything except taking profits off the table, waiting for the markets to settle down. 945, 950. Look for stocks that have high relative volume. Price above VWAP and rising for bullish trades. Price below VWAP and dropping. For bearish trades, right now we're fading the gap. 380 is a major level.
Following the US cash equity open here, noting Tesla dropping 7.4% at the open to the lowest level since August of 2020 now.
Yeah, QID is much cheaper now. Okay. Let's take a look at that. Okay. Merck. Let's see. Susie's working on Merck. Tapping up. Yesterday, this looked really good as it moved off of that level. I believe, Susie, you got in on this on Wednesday, right? Tuesday or Wednesday. Had a nice pullback to the 21-day, 921 50-day are all bullish. So Merck looks good for the follow through. All right. Baba had bounced. What's Baba doing? Baba. Okay, chopping around. Baidu, chopping around. Lulu. Baidu's bouncing. What's Lulu doing? Lulu. Big gap up on Lulu. Lulu. Gap and go. All right, Lulu, that's one that we liked last couple of weeks. Lulu hitting targets. 327.82 was the second target. We're above that now. All right, Lisa, are you still in this? That's plus 20 from that 310 level. Okay, nice follow through and SPY. This could go either way, SPY. All right, so Lulu looks really good. That's gapping up. Lulu following through. Next level is the 50-day on Lulu. Lulu on the move, following through. All right, SPY following through as well. Looking very nice here. Order flow looks good. Lulu still going. Lulu still going.
Extreme high tick alert.
Have suggested that there's still more pain to come, but even they have been through several quarters of downside revisions as well. So I actually think that a lot of this may already be in the price, and we have seen a major reset in valuations. Now, I don't think you're going to hear great rosy things from companies, tech or otherwise. I think what you're going to hear some downbeat guidance and conservatives because, I mean, look at what happened with GDP projections. They were 2% for this coming year, and now they're at 0. So I think companies' guidance will reflect that. But to me, one of the most optimistic things that may come out in this earnings season is companies are going to be focused on
HKD, man, this thing's all over the place. Trading halted.
like that. If companies actually, unfortunately, lay off workers and trim back CapEx and roll back the buybacks, they're preserving their margins. And I think markets will see that as a positive development.
Well, let's talk about those corporate decisions so far, Anastasia. Zuckerberg, Jassy, Benioff, all making cuts. Others as well in big tech. Is that sufficient to make you constructive on that sector?
I think it is definitely heading the right direction. So first of all, what happened to tech margin? If you look at the S&P 500, the tech sector, the margin was one of the highest in the S&P at 23%, and that has been under pressure over the last few quarters, coming down to 21%. Now, this is not the first time tech has seen margin pressure. And by the way, communication services are seeing that too. We saw that in 2020, we saw that in 2018, in 2015, 16, before that. But what happens is once you start cutting costs across the board, you can get that margin higher, and that tends to be what the market participants focus on. So I think there's still some ways to go in order to engineer a margin turnaround, but that's the very, very first thing that needs to happen is change of direction. John, what I like about tech is...
All right, just watching the markets. First 15 minutes, I'm not doing much of anything except watching what's going on, taking profits off the table.
Trading at 25 times multiple, that's at 17 times today. You look at software, that was trading at 20 enterprise value to revenue, a multiple. That's now 5.5 times. So we've seen major resets. And, I'm not saying that tech is going to reach escape velocity in the first half of the year, but
Lulu, nice little push there. Coming back a bit, Lulu.
Actually want to be inching into the space is now, is the first half of the year.
All right, let's go check out what's working this morning. Semiconductors strong. Nike, retail is higher. Looking good on retail. If we see a follow through there. Costco, follow through. Target, big gap and go. Target.
He appreciates the view of Anastasia that maybe this point might be a buy, but with a 3-year time horizon, this year could be difficult. Mike, we've got a channel to the Goldilocks view as well. I just got a message from a Bloomberg subscriber who wants to understand from your perspective. Here's the question on Goldilocks. Does Goldilocks and that view require a pause here from the Fed, or is it inclusive of additional QT and the additional hikes that are likely to...
MEGL going.
Yeah, Jonathan, I think, like I said earlier, the Fed keeps pushing and tightening financial conditions and gets that funds rate into the 5s and continues to do aggressive quantitative tightening, I think the chance of the economy rolling over into a harder landing is significantly higher. I think they could stop right here, continuing to let the balance sheet roll off. I think that's sufficiently tight financial.
When higher again today.
Best chance of engineering a soft landing. I think
Meta chopping around.
To 5 or maybe a little bit above 5%, and then they're going to have to cut rates a lot, and that's kind of what's pricing the markets. Not this year, but in the out years, the markets are calling with that bluff and saying you're going to have to get back to 3 pretty quickly and keep it there for a long time. And I think that's probably the right level.
Well, Mike, you're going way beyond this year, way beyond next year. You said this: we're selling bonds up for strong returns in the decade ahead. Mike, why decade call right now? What's going on?
That's what bond investors do, Jonathan, right? When you buy a 10-year bond, I mean, you're holding it generally for 10 years and looking for that long-term return. Our clients are long-term investors.
All right, market net flow is green. Market net flow is green.
20 years ago, yielded about what it yields today.
The dollar dropped from the highs back down to 105 and changed right where it was yesterday. 10-year pulling back 3.7%, and VIX gapping down.
Index, and we're trying to beat that index as active managers, I don't know, 1 or 2% in some cases. So, I mean, you're really setting up, Jonathan, without a doubt, a really good forward-looking return profile in fixed income.
Does that require, Mike, a return to pre-pandemic growth and inflation numbers?
Not necessarily. I mean, I think if you keep, inflation, like I said, at 3, if it doesn't go back to 2 or 1.5, it stays at 3, and the funds rate stays at 3,
Billy.
and the 10-year stays at 3 3/4, you're clipping this yield, Jonathan. You're clipping this coupon. As Rick Reeder said, there's a lot of value in the markets in really high-quality bonds to earn 6-handle yields. I think the mistake some people make, and Rick kind of implied is you don't want to just hunker down into 1 and 2 year bonds here, right? I think if you do that, yeah, you lock in that 6-handle yield for a year or 2, but who knows what the world's going to look like. The funds rate.
All right, market's just chopping around, pulling back now from the highs. Resistance 385 is a major level, 380 is another level. We're coming back to 380. That was big yesterday. A move below 380. They moved the put wall down to 370.
The yields have peaked on the long end because the long end of the curve is going to be sensitive to not only what the Fed does in the short term, but also what the economic growth looks like. And with economic growth expectations deteriorating, that's what's really sort of anchoring the long end of the curve. So I do like the barbell strategy, sure, being cash equivalents, being some short term for treasuries, but also take advantage of the yields that had a massive reset in the longer part of the curve. And I mean, the point that really resonates with me and a lot of our clients is the fact that
Dollar popping.
Again, that high quality investment grade yield close to 6%. That's great.
Okay, Billy. Yeah, Billy. You might get a better entry if it pulls back a little bit. Okay, it's just sitting here for now. I wouldn't do anything yet. Target with a big gap up this morning. Target with a big gap up this morning. I have target calls. Nice gap up above the 50-day.
Over the course of the first half, setting yourself up for the better second half. So this barbell strategy of being defensive and being opportunistic is really the luxury that this market is giving us right now.
Anastasia, wonderful, as always, to catch up with you. Anastasia Amoroso with brilliant Mike Collins. To both of you, thank you, and Happy New Year again. I think after today we'll start with Happy New Year. The market right now, but it's getting struggling to stick. Up by 1/3 of 1% on the S&P. The Nasdaq just about turning negative in the last 5 minutes or so. Looking at the bond market, the moves there starting to fade as well. We had a big move at the front end. Yields still lower, just not as low as they once were this morning. We're down by about 5 basis points on a 2-year to 441. Keep an eye on that for you.
Biden says the job report is great news for the US economy.
We'll catch up with Labour Secretary Marty Walsh. She joined us on the payrolls report in just a moment.
Okay, market net flow is still very green. Market net flow is still green. Tick is green and trending higher. 1-to-1 up volume.
Biden says we are seeing a transition to steady and stable growth. Noticing the Nasdaq 100 are raising gains, falling spot 3% to a session low now.
Got mixed signals. The market's pulling back right now. We've got tick cumulative green, 1-to-1 up volume. We got the dollar moving higher, the 10-year moving higher, and the VIX moving higher. Those three right there are a headwind. We're below 380 very quickly. A $4 drop. $4 drop.
Biden does add that we still have work to do to bring down inflation.
Wait a minute. That was Biden saying to bring down inflation? Is that somebody else? Who the hell is talking there? Yeah, it was him. Okay. All right, so nice bounce. We're above target, looking really sharp there. TJ Maxx also, we're looking for a breakout in TJ. TJ with a gap up. TJ Maxx, nice gap up on TJ Maxx. Looking for a follow through on this breakout. Okay, TJ Maxx looking for the breakout. Making progress. It's in an area where there's no overhead supply.
Just keep in mind, US Labour Secretary Walsh currently speaking.
TJ Maxx. All right, TJ, watch for it to follow through. There's no supply up here. All right, looks like a bear flag on SPY. Market net low is green, but that can go red very quickly. Excuse me. Lulu, looking for the follow through, and Lulu fading at the moment. All right, give it a few minutes for the markets to tell you what we can expect for the day. Snowflake moving lower. Paramount rejected. Meta pulling back. TJ Maxx watching for the breakout. Walmart looks good. All of the retail stocks look good. We were looking for retail. Weekend video, we were talking about retail. And, you know, this is day 4, right? Tuesday, Wednesday, Thursday, Friday. We started off right around 60 for the week and continue to push higher. If we get above the 50-day, look for the stocks that are creating that wave, like Nike, Foot Locker breaking out. Foot Locker breaking out.
With a range of 1.5% to -1.8%. US ISM services prices paid previous 70. US ISM services employment prior 51.5. US ISM services new orders prior 56. US durable goods revised forecast -2.1%.
Walmart.
Prior -2.1%.
All right, Walmart doing exactly what we wanted to see this week.
We also expect Fed's Bostic speaking on CNBC.
Walmart doing exactly what we wanted to see. Get back above the 50-day. Stephen? Okay, nice bounce right now. SPY. TJ Maxx, watch for a breakout. TJ Maxx, watch TJ. All right, TJ Maxx looking for the breakout. All right, so retail looks good. Semiconductors were leading. Let me just check that out real quick. Semiconductors, TJX. I want to keep an eye on this. TJ, ooh, TJ's looking good. Look at that. Looking pretty. TJ Maxx has an ATR of $1.45. It's currently up $1, so maybe another 50 cents. Maybe it's an expansion day breakout. Looking for that expansion day breakout. All right, TJ's going here. Market's bouncing. All right, so that looks good. Lulu. Let me go take a look at Lulu again. Lulu doing exactly what we needed to see. Lulu do get above the 21 day. That'll give us a shot at the 50 day. Probably next week if it doesn't develop today. A little patience there. McDonald's gapping up. All right, Chinese stocks, a little dip first thing. People taking profits. Had a pretty good week. Alibaba dipped. Baidu dipped.
Eastern Time, we get US ISM Services PMI forecast 55 on the prior 56 spot 5.
SPY on the move. SPY.
53 spot 3. US factory orders month over month. Forecast minus 1%.
All right, so this is day 13
The range of 1.5%
in this range.
1.8%. US ISM services prices paid prior 70.
ISM
services
numbers.
Prior 51.5. US ISM services new orders prior 56. US durable goods revised forecast minus 2.1% on the prior minus 2.1%. US core durable goods revised prior 0.2%. We also expect Fed Bostic speaking on CNBC.
ITA, defense spending, ITA going. All right, ITA, aerospace and defense, ETF, that one's popping. If you don't want to trade the individual names, got a gap and go here. Let's look at Northrop. Okay, that's above the 50-day. Lockheed Martin. There was some news on Raytheon, RTX. Okay, Boeing gapping up again. We got another few points to get to that 1618. It's not a magical number. It's just what a lot of people look. The only reason why fibs work is because a lot of people use them. No magical potions, just watching. The main driver here is earnings. They keep signing contracts. Management's doing a good job of keeping institutions interested. You could see the volume since November, that investor day. The volume keeps picking up. It's all mostly green with a few exceptions. That's institutions. You think they're done? I remember Boeing in the 300s, 400s over here. Okay. It's above the 10 EMA weekly. Momentum is clearly bullish, so buy dips only. Boeing, buy dips. Maybe something here. I'd be reducing my risk today into the weekend. Paramount, was looking for that to follow through. Paramount. The communications sector taking a little breather. Let's see, XLC. Meta, number one in that sector. Still trending. Meta, Charter, Fox A, Paramount. Okay, let's see if semis are still leading. All right, so we've got 90% of sectors green. Metals and mining are leading. XME, so check your favorite, like Freeport, Rio Tinto, Vale. Okay, those are all gapping up. Strongest sector.
One minute remaining. I'll lead with US ISM Services PMI. Ten seconds. $49.6, lower than forecast of 55. US factory orders month over month, -1.8%, -1.8%, lower than forecast of -1%. Canadian IV PMI, 33.4, 33.4. US ISM services prices paid, 67.6, 67.6. US ISM services new orders, 45.2, 45.2. US ISM services employment, 49.8, 49.8. US durable goods revised, -2.1%, -2.1%, as expected. Seeing some slight upside in the S&P 500, upside in gold, downside in the US dollar.
All right, so we got a lot of bouncing going on, choppiness.
Still waiting for US core durable goods revised.
All right, market net flow.
0.1%.
We got big green shoots on market net flow.
Extreme high tick alert.
All right, nice bounce in the SPY. All right, that's good. All right, Netflix starting to bounce. Boeing looking for a follow through. Boeing 217. I'd be selling into 215 to 217.
Full report on the feed for all those interested.
Extreme high tick alert.
Factory orders prior revised at 0.4%, 0.4%.
All right, Boeing. You know where the levels are on Boeing. That looks good. I would be taking profits into this 1618 area right there.
US 3-month yield exceeds 10-year by 1 percentage point.
All right. All right, so Boeing's probably just going to keep going. I'm very bullish. I have no level where I'm saying, until I reassess the markets, I have no level where I'm saying, you know what, I'm no longer bullish. What they're doing just started 2 months ago.
US Treasury 2-year yield declines further after data, last down 11.2 basis points at 4.341%.
What the company is doing has changed dramatically from previous years. Okay. We got all the bad news out of the way. Okay. So even if we get 50% of this move from the high down to this low, 50% is right around 220, I believe, right? I don't think I have a weekly. Do I have a weekly? Boeing. Yes, I do. Okay. Boeing weekly. All right. There's your weekly. All right. That's my targets for the weekly. Okay. We're meeting some targets already. All right. So Boeing should be doing very well for you.
Fed's Bostic is now speaking live on CNBC. Fed's Bostic says today's jobs data does not change my outlook on the economy. Fed's Bostic says we still need to stay the course and inflation is too high. US Factory Orders November 2022 full report is now on the feed for all those interested.
All right, so weekly looks really good on target. All right, looking for a follow through. OG for now.
Bostic says that in Atlanta, jobs picture is rock solid, and nationally, jobs have stepped back a bit since the summertime.
High took alert plus 800.
Bostic says wages are not driving the dynamic right now. S&P 500 extends gains after economic data, last up 0.7%. Bostic says unemployment is going to rise a little bit.
All right, Boeing. All right, so the markets are cooking. If you have Freeport, Rio, Valet,
In my September,
XME, those are all bouncing around. Baba.
I have unemployment rising to 4% this year.
Baba bouncing.
Dollar yen erases gains, falls to 133.04 as US yields.
Let's see what Baidu was doing yesterday was rallying. Baidu had a nice trend here. We're coming back. Our buyers are stepping up. There goes SPY. Extreme high tech.
My baseline outlook. Bostic says if there is one, it would likely be short and shallow. US 3-month and 10-year curves deepen inversion to minus 105.59 basis points after data, most inverted since at least January 2021. And Bostic says I see rates rising by 5% in 2023. Bostic says I see interest rates rising to between 5%.
And Dick's Sporting Goods having a good day. Dick's is at the high of the day right now. All right, don't buy the high of the day. Wait for little dips.
Bostic says we then need to hold there and let that policy rate grip the economy. Bostic says we need to stay at rate peak to stay there well into 2024. Bostic says there will not be a lot of urgency to cut rates.
High took alert plus 800.
All right, SPY's still going there. Dick's Sporting Goods looks good.
Data will guide us on the size of the next rate hike, whether it's 25 basis points or 50 basis points.
Boeing. We're looking for this to launch.
Bostic says today I would be comfortable with either 25 basis points or 50 basis points in February. Bostic says if labor market eases more, I would be comfortable with 25 basis points move. Just be aware that Fed's Bostic is not a voting member this year.
All right, so pushing a bit higher. All right, nice push. Nice push.
High took alert plus 800.
All right, nice push.
But it's still good consumption in the economy generally, with some.
All right, Rick Reader on Bloomberg. All right, so nice start to the day. It's a little after 10 o'clock on the East Coast. This is your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday the 6th, and the markets are starting to tag the highs again. Market net flow is green. So this has been a pretty choppy morning. If you've been able to trade this move, it was a $4 move down to $379.50
Fed's Bostic says there's still more work to do on bringing down
from the
inflation.
highs. Bostic speaking, obviously. Fed speaks. All right, Baidu. All right, looking for Boeing to hit those upper targets. All right, so it looks like we might chop around today in this range between 204 and 208. Boeing. 204, 208 seems to be a range right now, flat VWAP.
Fed's Bostic says we don't want to claim victory prematurely. No repeat of 1970s.
So they are focused on the Volcker days.
Fed's Bostic says we want to be cautious as we get more restrictive and calibrate effectively to not cause spikes in layoffs. The US dollar index extends losses to session low
Lulu
of
pushing a bit higher. Lulu.
104.6, now down 0.4% on the day.
All right, Boeing.
Fed's Bostic has concluded his interview on CNBC.
High took alert plus
Boeing.
800.
SPY back up to the highs. All right. All right, just watching the markets right now, trying to figure out whether it wants to take out the high. We got supply overhead, 385 is a major level.
The US dollar now up 0.60% on the day.
Dollar moving higher.
Extreme high took alert. High took alert plus 800.
US Treasury 2-year yields hit
Extreme
session
high
low
took alert.
last down 12.7 basis points at 4.324%. Just taking a look at the fear and greed index, 45 out of 100, which is neutral, and the crypto fear and greed index, 26 out of 100, signaling fear.
Just scanning through some things here while we're trading at the highs. This could be resistance here. I mean, it is resistance. Supply overhead. So we need to take out 385 if you're thinking bullish. 385. 383 has been a level that we haven't been able to push through as well. 383, 385, 387, several levels or layers of supply overhead. There goes Boeing, pushing a bit higher.
High took alert plus 800.
All right, Boeing still drifting back up to the highs. Boeing looking good. Okay. HKD fell off a cliff. $30 off the high. All right. We're still dealing with supply overhead. Supply. Okay, FXI, looking for a follow through in FXI. Watching Boeing here. Following through FXI. Nice run off the lows. Sorry, shake out a bunch of people and rip it back up to the upside. Okay, looks good. I like playing it with FXI as well because you aren't exposed to individual names or earnings per se. FXI. Supply. Boeing, a little profit taking, but still moving higher. FXI doing well. You got Billy coming off the lows. If you're thinking about Billy, I like the dip, stop at the low of the day. Same with Baba, all of the Chinese stocks. Billy. All right, so you're looking at Billy. Billy, let me see. All right, Billy, I bought some more shares in Billy.
US 30-year yield falls 6 basis points to 3.737. According to the Treasury website, the US issues fresh Iran-related sanctions.
Market net flow is very green now. Market net flow. FXI. Let's see what some of these others are doing, like Baidu. Baidu bounced. And Baba bounced. Okay, almost back to green. Baidu, Alibaba. Baidu had a good day yesterday. Baba is green already and pushing higher.
The Bank of Canada hiking 25 basis points in January.
HKD turning the corner. All right, Baba. SPY still supply up here. Boeing looks like it wants to take out these pivots right here, this flag. Watching Boeing. Having a good day on Boeing, are you? Okay, good. Boeing looking good. Nice little dip down to 203. Buyers step up. +4, +5. See if we can't take out the high. Supply. They're chewing away at the supply overhead. It's still resistance until it isn't. McDonald's, nice little gap and go. $266, trying to get above $266, McDonald's. All right, so ITA, the defense group, ITA, aerospace and defense, gapping up, trying to break out 52-week highs. ITA pulling away from VWAP looks good. Volume, relative volume looks good as well.
10-year government bond yields extend forward to session lows, down 10 basis points on the day at 2.21%.
All right.
High tickler plus 800.
All right, Boeing looking very strong. Here goes Meta. Meta's going. Billy looking for the follow through. Baidu, Baba, all the Chinese stocks pulled back this morning, giving an opportunity. Stop at the low of the day. Tesla back down to that 102 level and bouncing. It's at 106.50 now. Tesla still down $3.90, 3.5%. Tesla. Okay. So most likely it'll be chopping around it. If it's going to hold this area, I'd look for a base in this in the same zone, 100 to 130 maybe. We're still 921 50-day pointed down and to the right, but RSI is rising. You're seeing some bullish divergence in Tesla. RSI. Okay, you got a lower low in price and a higher low in RSI on Tesla. Just noting it. I'm not betting on it that it holds this base, but it looks like it's trying to base out here. SPY still dealing with the supply overhead. If it jumps above 385, that would be nice. Then maybe a shot to 390. All right, so we're trying to get through the supply zone. Trying to get through supply.
High took alert plus 800.
All right, looks like we're gonna try to break through 384, 385, starting to go. All right, we're going here. Looking good.
US stocks extend gains, Nasdaq up 1.04%. All right, Boeing looking like it's wants to go. Release the Kraken.
Extreme high took alert.
All righty, trying to get something going here. We're pushing through levels. All right, the more levels we push through, obviously, the better our chances for retest of the 50-day. That's what I'm thinking. Maybe we see a test of 390, 3,900. A lot of work to do. We've been down here for 13 days. Okay, so this is the nicest looking candle we've had in a week. You see that one over there on the left, right in the middle of this? The 50 days overhead, you got spaghetti overhead. So basically, we got a lot of supply to deal with. These volume by price bands, that's where most of the trading has occurred on a volume basis in this area between 37.50 and 39.50. So a move through this area would be significant. There goes SPY. SPY's looking really good here. Nice job. SPY's moving higher. Good. Good, good. Let's see what they can do here. Boeing's about to take out the high of the day. Boeing. Hey, Frank. Doc.
Largest US refineries returns to production after cold weather shutdown, according to sources.
Extreme high tick alert.
Boeing. Nice little move back up to the highs with Boeing. All right, so we look good here. We just got to get through this zone. It's not going to be easy by any shape of the imagination. RSI's trying to get through 50. SPY's doing its best, though, to entice more buying. We got blocks, but not really anything worth writing home about. Okay, so keep that in mind. Hey, Jamie. The other, Ken just reminded me of something. The other names in the broadcasting space, we're looking for a follow through. The dip's getting bought. Here's Paramount. Paramount's a cheap name, but it looks like it's going to keep going. Warren owns it, Paramount.
Extreme high tick alert.
All right, so Paramount looks good. So does Warner Brothers, WBD. Warner Brothers, another one. Warner Brothers. This looks good for a cheap stock. It could get to 15. It's breaking this downtrend. The volume looks like institutions.
Pound dollar rises 1% to 1.2028 amid broad dollar weakness.
Warner Brothers. You could trade options too. You could trade options. They're pretty cheap. Say April or something like that. Yeah, those are cheap. The $10 call is only $2 for April.
Extreme high tick alert.
WBD. Um, 1250. $12.50 would be the farthest I'd go out of the money. That's a $12.50 is what, a 40 delta, 44 delta, 44 delta. WBD April 12.50, 44 delta. All right, SPY. Not making it easy, right? Pulling back a little bit. WBD is pulling back a little bit right now, so maybe a better entry. Let's see, FXI. 3 days above 30.50. Looks good. Buyers stepping up low of the day. FXI. Boeing. All right, SPY. Boeing looks good. Just keeps trending. Wow, that's pretty. That's pretty. Just off the high of the day, Boeing. Looking good. A little profit taking there from the low to the high. That was a nice $4 move. Boeing, let's do something here. Got quiet all of a sudden. A little bit of selling. Some decent volume. We just don't have a whole lot of blocks. We got 3 blocks right here, 379, 379.41, just hitting the tape now. 379.41. 800,000 shares. Blocks. Oh, another one. All right, so we got a million right here in blocks at the high of the day. All right, so trading these at the high of the day, 379s. 379. A lot of 379s.
That newsletter here is Goldman Sachs Research pegs the probability of a US recession at 35%, quoting our most out of consensus forecast for 2023. Is our call that the US will avoid a recession and instead continue progressing towards a soft landing. This according to Miracle and Phillips writing a recent report for Goldman Sachs.
379 SPY. 379. 379 looking for a follow through. 379 SPY. 379 looking for a follow through. SPY. 379 hitting the tape here. 379.41 bullish above. These are hitting the tape now. That's yesterday's close. Bullish above that. Knowing where your resistance is. All right, having a good day. Nice gap up.
High took alert plus 800.
All right, getting above 385 would be awesome. We got a lot of stocks following through. SPY looks really smart. We got all those blocks hitting the tape. Okay, that looks good. Thank you. Thank you. Looking for a follow through. Okay, looks good.
Extreme high tip alert.
Bears are scrambling. Bears are scrambling. All right. Higher high, higher low. We're off to see the wizard. Hi ho, hi ho. Andy, You know what I've been watching lately is I don't know if this is for older folks. Been watching What's My Line on YouTube. Some of these they do the blindfold, trying to guess who the star is that comes on. Really quite
Extreme
entertaining.
high tip alert.
What's My Line? I don't know if you remember that as a kid. My parents used to watch it all the time. It was always fun. Spy still pushing higher. Nice rally today in Spy. Thank you very much. Silver turning. Metals and mining. Yep. XME, Rio, FCX, Vale, Newmont, silver, GLD.
Extreme high tip alert. High tip alert plus 800.
Still going. Spy. All right, Boeing, near highs of the day now. That's funny. Funny, Mondo. That's funny. Boeing is about to take out the high of the day.
Extreme high tip alert.
There goes Boeing. Goodbye. Goodbye. All right, nice move, Spy. 385.10, kind of stuck, kind of sticky here, not following through. The candle's getting smaller. Dojis now, 2-minute chart. Boeing high of the day. That's a beauty. Boeing doing its work, doing a job here. Boeing back to the highs.
High tip alert plus 800.
Still getting more high tech alerts. Boeing looks really pretty. Okay, starting to show some muscle up here, maybe. Wow. Very nice, Boeing. Thank you. HKD starting to needs to get above 26. Above 26, some alerts will start going off. Some triggers will start going off above 26 if HKD gets above that level. HKD, we sold some at 50 in the pre-market. Had shares to track it with Mondo and Cayman. Sold it at 50 this morning. Took the gift. Was up 20 points or whatever from yesterday, right? Anyway, that dipped quite a bit from 50 down to 20, bounced, and now it's starting to turn a bit higher. Above 26 should trigger some signals. We'll see what it does after that. Yesterday was trading in the upper to mid 30s. Yeah, I got a feeling Stephen Boeing's just getting started. Tesla. Nice one there. Cayman.
UK short bonds lead gains. 2 and 5-year bonds yield drops 10 basis points.
Billy looking for higher high now. Higher lows, higher highs. Baba. Baba. We'll pull back there on Baba. What did Target popping this morning? Taking some profits off into strength, not a bad idea. Target, I'm looking for a follow through. It's sitting on top the 50-day, so you got some free space in here, up to about 167. Then you've got the 200-day over there at 169. Let's call it 170. So it looks like we could follow through another 5 or 6 points on target. Double bottom was the idea. Stop below. That was 2 weeks ago. Now it's just following through. Target's doing exactly what you'd expect. Watch the volume. Sneaky volume coming into this. It looks like institutions have been nibbling, trying to get into shares without this ripping higher. The top of the range is around 182. You got the 200-day. So if it gets above the 200-day or the 182 level, you got some gas there. Maybe we see a follow through. Baba, Billy, Baidu, looking for a higher high on Baidu. Is making a higher low right now, it looks like. Baidu. FXI, higher highs, higher lows. Looking for FXI to get above 32. FXI. I will say this about the Chinese stocks, okay? If the this is a new development, all right? So for the last few weeks, we've been above the 10 EMA weekly for the last 6 weeks, okay? Decisively, we broke this downtrend. So what I'm concerned is that if the spiders, if the S&P 500 and the indices start to move and push higher, that we might see some money coming out of those Chinese names to buy the index, or, stocks in the index, whatever. So I'll be watching my profits closely. Baba, Baidu, Bilibili. For now, we're doing fine. I mean, you've got other countries that are seeing their share of money flow. Okay, yesterday we talked about this: France, UK, Ireland, Italy, seeing money flow. Okay, so look at these. These are all green today. Okay, so who's the number one? South Korea. All right, they make quite a few products. All right, so you got the downtrend break. All right, here's South Korea. So this looks really nice. It looks really nice. You got an inverted head and shoulders on the weekly, EWY weekly, 10 EMA. All right, let's check out EWQ. That's France. EWQ.
Port Arthur, Texas refinery restart slowed by steam supply.
Italy.
Sources.
EWI is Italy, right? EWI looks good. EWI. Okay. EWI. What's the UK? EWU. All right. So EWU. EWU. UK. EWU looks really good. UK. Let's see. That looks good. EIRL. EIRL. Ireland. All right, that looks good, Mr. Johnson. If you're listening from Ireland, Mr. Johnson, that looks really good. Your country ETF looks really good. All right, a lot of country ETFs, a lot of places to put money. All right, there goes SPY more. Big move today. All right, Boeing pushing the highs of the day now. Very nice move on Boeing.
US Treasury 2-year and 3-year yields fall 20 basis points on the day.
That's my mother's maiden name, by the way. Okay, continue to push here. Don't fight the trend here. Looking good. All right, so what can I say? The markets just look really great, and there's a lot of countries other than the U.S. that you can invest in if you're from another country, and you're checking out your stocks in your country. Like I'm thinking, I might want to start buying some India shares once this gets above the 50-day. Looking at lots of places to put money to work. Turkey, obviously been on a trend for some time now. Turkey's just gone crazy. It's starting to see some profit taking. Okay. All right. Man, what a nice day. I would be personally, what I'm doing is I'm taking risk off the table. I'm reducing the number of open positions I have. I have 3 or 4 Chinese stocks, options. I'll probably take some profits off, maybe put some more in FXI, something like that. Less independent stock risk, looking for a follow through. I'd like to reduce my exposure in some other names. I have some McDonald's calls. I'd like to take some of those off. I have some calls in the defense sector, ITA. I have February calls, so I have plenty of time on that. That's doing very well today. ITA is up huge. ITA is up huge. Okay. Mm.
Leondale Houston refinery operating at half capacity due to a coker outage, according to sources.
All right, a very nice day. All right, starting to see a little profit taking. Boeing. Nice move on Boeing. Still going, Boeing. I wish I had more left. of these 200 calls. Maybe I'll take these off. The 200 is going for 1160 offer for 120. I'll probably take this off. Boeing. I did that yesterday and wind up having to buy some back and watch the price just keep going. Maybe I'll roll some out.
We are now 5 minutes away, so we're expecting to hear comments from both Fed's Cook and Fed's Bostic, speaking at an AEA event with ECB's Lane as well. As a Fed Governor Cook is taking part in a panel discussion on inflation during the annual AEA meeting in New Orleans, with text expected for Fed's Cook. So also remember Fed's Bostic also speaking here. So ECB's Lane and Fed's Bostic.
All right, I sold the 200 call.
Global economic outlook during the annual AEA
I sold the
meeting in
200
New
call.
Orleans. No text is expected for these two, but there will be a Q&A with the audience.
No sense getting greedy. Okay. All right, filled 1358. Boeing. Okay, they filled at 1358. All right, I'm just reducing risk on Boeing. Boeing, see that? I just sold the damn thing. Sold it, and there it goes. Laughing my ass off. That happens every freaking time. Yeah, I'm going to get. That's okay. You know, great. I'm glad you guys are doing well. New high of the day. Yeah. Yeah, it could be worse. Selling for a loss. I'm not complaining. We got those originally around 450. This is the gift that keeps on giving. If the company keeps closing on deals. Oh, good, good. All right, so we're looking like a little profit taking right here. Looks like a little profit taking. All right, looking for a bounce, follow through. All right, so that looks good. All right, cool. ITA at the highs. I'm going to take some profits here on ITA. ITA.
As Cook says, the Fed needs to study and understand how changes in the economy, ongoing supply disruptions, and other issues may influence inflation in the future. This inflation is far too high and of great concern, despite recent encouraging signs. Says market rent data suggests the housing inflation is too slow. Also says data suggests growth in worker compensation has started to decelerate. So Cook does not indicate preferences for next rate increases in her remark prepared for delivery at the economic conference today. Cook also cites improving supply chains and anchored expectations. Again, Cook not indicating preference for next rate hike increases.
All right, ITA looking pretty strong. Buy some dips. I'll buy some dips. Josh mentioned this one on Tuesday, I believe, live. We talked about ITA, aerospace and defense. It's one way to trade it. If you weren't interested in buying Boeing or Lockheed Martin individually, you could trade some ITA. That's having a good day, ITA. All right, big breakout. I would expect to see some profit taking up here, and then maybe a little dip and then a follow through. The reason why I'm not just swinging this is because I'm not trading shares. If I was trading shares, I'd be doing the opposite. I'd be holding on to the shares and selling premium, probably some put premium. You could sell. You could buy the. Excuse me. You could sell like the 112 put and buy the 111 or 110 put for a credit spread, expecting this to move higher. So you would be bullish. You'd sell the close to the money, like the 112. You could even do probably the 113, although you might get hit on the 113. 112, let's see what that's going for. 112 call.
Looking to media availability for this AEA meeting here does not.
You get $5 for that.
Free voice stream available for this or video stream either for this particular panel.
Oh, that's okay. No, the puts. The puts. Sorry.
To attend the event live, but that is all, I'm afraid.
Actually, it's not even worth it. The 112. The 112 is 90 cents. Yeah, it's not even worth a credit spread. So if I was trading shares, I'd probably just swing it. It's probably going to follow through and buy dips to add to a position. ITA. Boeing doing a nice job today. All I'm doing is reducing some risk because I'm trading options. I want to take the money while the IB is inflating.
Fed's Bostic says we are still in a pandemic recovery. So comments from Fed's Bostic at this AEA panel now.
Okay, watching HKD, it's sneaking up a little bit at a time. HKD, that's AMTD Digital, HKD. DocuSign, that had dipped down to 52 and change. That's bouncing. It's up $1.40 from the low. DocuSign. Blue Apron, nice little pop there. Penny stock. Blue Apron, APRN, came in talking about that one in the trading room. TJ Maxx, man, nice run on TJ Maxx. All right, SPY looks like it wants to go some more. We're above 385. We could run to 387. Where's your next level, Mikey, if you're listening? Let me see. He might have already posted. I think above 384, 385, it tapered off quite a bit. At least that's what I'm seeing on the futures. Tick cumulative is green. We're 4-1 up volume.
Fed's Bostic says how the economy evolves will shape what the Fed has to do.
Welcome, Raj. Just check your DMs.
Bostic says the US economy is definitely slowing. Fed's Bostic says housing and other
MEGL trying to do something, tight squeeze.
Labor markets easing. Fed's Bostic says it's still not easy to find workers, but it is easier.
Okay, HKD turned above, all right, triggering signals. On the 2-minute chart. Okay, HKD is triggering our alerts here, trying to go. Okay, so more and more people will see this as an opportunity on the dip.
Is not changing rapidly. Process will take some time, Fed's Bostic says.
Boeing. All right, so Boeing looks like we got a good sell. Boeing.
As a reminder, Fed's Bostic has already spoken once today already. The Fed's Bostic also says the US has a lot of momentum to absorb Fed policy and avoid significant contraction. So just keep in mind again, when Fed's Bostic did speak earlier, he did say that if the labour market continues to ease, he'd be concerned with a 25 basis point move in the February meeting. Also keep in mind, Fed's Bostic is not a voting member on the FOMC this year.
Okay, so let's take a look at Boeing. All right, so last night I posted in the alerts channel some thoughts that I was having about how do you trade. We're looking to buy and make. Personally, I like to target anywhere from $500 to $1,500 a day. If I can get more, that's fine, but I try to average $500 a day. That's $10,000 a month. Now, how do we do that? Well, first thing is decide whether or not you're going to trade options or shares. What I always do when I come into the trading day, I'm taking profits into strength, first 15 minutes. I look for any kind of drop to rebuy, which is what you could have done on Boeing. Look for a move back above VWAP. Once we see around 10 o'clock, we see what VWAP is doing. That can give us an idea whether the stock is going to stay bullish. We know that Boeing is bullish. So the idea is that we can buy dips, very strong. We see institutions. We see this dip as an opportunity. Even if we didn't dip, if we just had sideways, when we have sideways price action, Yeah, flat VWAP. I'm probably trading less on the options and more on shares. That's another scenario. But what we're looking for is VWAP to be tilted up and to the right. That tells us to look for this stock to be in play. Watch for news, and you want to be buying dips. And if I miss the morning run, this is the key. All right, if I miss the morning run, I don't try to rush it. I certainly won't buy the high of the day. I can't say this enough. Don't chase it up here, because invariably what'll happen is you'll have a dip later in the day between usually between 12 and 2 o'clock. Okay. Yesterday, Boeing popped up and then just went sideways. Let's see if I got another example here. Baba. Yesterday, it popped up and it pretty much went sideways at the highs. Lulu. What did Lulu do yesterday? Lulu. Okay, so we popped up in the morning, taking profits the first 15 minutes. It drops. You could have bought here, but we did have a flat VWAP. So it'll probably, yesterday we were already in Lulu, so we were looking for a follow through. It didn't happen. We drifted a bit lower. That day before yesterday. Yesterday we popped up to the highs, and then we drifted lower. And right around 12, this is a good example actually. All right, so you have the morning run right out of the gate. Lulu runs up. If you had options, you probably took profits. Okay, so think about that for a second. You took profits in the first half an hour, first 15 minutes, which is what I always talk about. Then price action moves lower into lunch, and it holds near VWAP. And then the volume starts to pick up, pushes back above VWAP. That was your tell right there. So if you miss the morning, wait for the evening. If it's a bullish trade setup, like it has been over the last week and a half, if it's a bullish trade setup, then you know most likely you'll have a high probability setup on any pullback. If you miss the morning, just if you miss the morning, look for that dip around 12 o'clock, 1 o'clock. That happens quite a lot. And if you're looking for $500 a day, $250 a day, then you're trading off of this VWAP and this pop, and you're taking profits. Okay, so I'll talk about that a lot more in the new year, but we want to focus on what's our goal when we're here. Are you a swing trader? Do you just want to be in it and don't worry about it? During this market cycle right now, I don't want to do that as much, because we don't know what tomorrow brings, right? You get a little data that comes out and the markets drop. Get a little pop today, everybody gets excited. If you're a swing trader, you have to be careful that you don't get too overextended and think that tomorrow's just going to bring another bullish day, because we don't know that, because we've been chopping around here for 12 days. If you've been using that mentality to swing trade, you've been very frustrated, because this is 14 days below the 50-day, 13 days above 3,800, and we just had this chop. So therefore, in order for me to make 250 to 500 or more per day, I'm looking to trade these intraday setups, and I'm using options. Okay. So Lulu is a good example, because yesterday, okay, we had the run up. We took profits first 15, 20 minutes. In this case, it ran up until 10 o'clock. Opening range, what did it do? Opening range, it didn't break out. It pulled back. And we look for that 12 o'clock dip. 12 o'clock dip, what happened? Volume picks up, MACD turns, RSI gets back above 50, and price is confirming by buying candles that keep pushing higher. You had a squeeze, and we broke out. So that was a good area right there to make $250 a day. That's $5,000 a month if you can average that. The other thing is, if you buy the high and you start to get a 5, 10, 20% drawdown, you need to take those losses quick and wait for the dip to confirm again. Okay. So anyway, I kind of beat that to death. That's what I was thinking about last night. Do you have a strategy? If you don't have a strategy, you got an issue. When you come into the trading day, you have to know what you're going to do and what you're looking for. I'm always looking for price above VWAP. I'm looking for VWAP to be upward sloping, and I'm looking for a catalyst along with high relative volume. Relative volume, see over here on the left, how the volume has been building the last couple of days. The relative volume is much greater than it was on Wednesday, much greater than it was on Tuesday. And it keeps building. Look at this right here. It's starting to build some more. Okay, so I'm anticipate this might push higher, but we've got a flat VWAP, so maybe it even comes back a little bit. It's Friday. Let's take a look at SPY. All right, SPY. Okay, so look at VWAP. It's tilted up and to the right. So now we're anticipating that maybe this comes back a little bit. At the top of the range, most likely supply up here. Look for confirmation. If we start to fade some more, if we can't hold 385, come back to VWAP. Coming into a trade, you have to know what's the maximum amount I'm willing to lose. If I'm taking a $1,000 trade, the maximum I want to lose maybe is 5%. Okay. And I always scale in. So if I'm wrong on a partial amount, not the entire amount. So if I was going to take 1,000 shares of Lulu, okay, I would be watching right here, but I would only scale in with 100 shares, most likely, not 1,000. We got a flat VWAP, so there's a possibility we come down here and test 328. It's a Friday, so a lot of people are taking profits off. Or an FXI making a higher low. So here's a good example here. Okay. So early morning we had a dip. We get back above VWAP. That's important. Look at the relative volume compared to over here. Same time. Relative volume's picking up. Look at it right there. Those little blips right there of volume as it pushes higher. Now I'm looking for the same thing. I'm looking for more of that and fewer of these red sticks. I'm looking for green sticks, and I want us to go green. If it does, then I know that Baba, Baidu, and those will probably be moving higher. Here's Baba. Here's Baidu. Okay. Always looking at VWAP. Always pay attention to VWAP if you're trading intraday. VWAP up and to the right. All right, let's see if there's any news on Baidu. On Tuesday, we followed through into on Wednesday. Wednesday, we got news that the Chinese government was going to allow financing for the Ant financial arm of Baba. They own 33% of it. That boosted all of these stocks. And my view was that it's not going to last just 2 days or 1 day. It's probably going to see multiple days of upside. Each day, we just want to keep our stops underneath the previous low of the day or today's low. Baidu, note the candles here. Look at the wicks at the bottom of these candles. There's buyers at the low. Every time this pulls back, buyers have stepped up. All right, that's just Baidu. Baidu had a nice run over here yesterday. VWAP, here's a good example of VWAP. All right, so this dipped a little early. It ran up in the morning. It dipped before noon. Right at VWAP, it took off again, and the relative volume picked up. So that's what we're always looking for. And look how VWAP started tilting up and to the right into end of day. Now, we did have some selling up there, so you had a nice profit. Some of those options were up 100% from this pivot right here up to the high. Watching SPY for a breakout and looking for Baidu to go green on the day. The other thing is, it's easier, I find personally, it's easier for me to accomplish $500 a day, $1,500 a day, whatever my goal is, It's easier if I'm trading one or two positions. If I'm trading a half a dozen positions, I have to be able to follow those, and I can't get sidetracked. Because I am broadcasting, I don't like to take 6 options trades or 10 options trades. It's too difficult to watch all of those at the same time on entry. All right, FXI. All right, the more you practice this, the more consistent you're going to be. There's FXI. So who was it that mentioned it in the trading room before? FXI, very bullish look to it. Okay, Money Magic talked about it. Michael Keeley talked about it this morning at around 10:20. All right, here's 10:20 right in here. Okay, so this is a good example. All right, so Michael mentioned FXI right here as it pushed through VWAP. So I assume Michael's doing exactly what we're talking about. We dipped, we got back above VWAP, and look at the relative volume. Look at the volume compared to 10 o'clock yesterday, 10:30. Okay, prices moved above. You had confirmation candles, buyers here. Okay, you got this little dip back to VWAP, and it gets bought again. That's probably the better area. A lot of people like to get the retest of VWAP, and it took off to the upside. So Michael did a great job of alerting us to FXI. Most of you are already trading it anyway. And along with FXI, all of the components like BABA and Baidu are following through. Okay, so watch the dip, moves back above VWAP. Look at the relative volume. MACD, RSI, and VWAP are all tilted up and to the right. That's how you make $500 a day or more. Even if your goal is $250 a day. You know, LA accomplished a $56,000 improvement in his account last year during a bear market. That's phenomenal. Just by sticking to a strategy. All right, so Baidu. All right, these look like they're going to keep going. Look at Baidu. Look at that tight Bollinger Bands, and now we're squeezing, and the upper bands are getting the treatment. RSI is pointing the direction, along with MACD. Volume says institutions, day traders, momentum traders. A lot of people see the same thing. That gives you a higher probability. When more people are focused on something, the higher the probability. There goes Baidu. Cool. Cool, cool, cool. Okay, HKD looking for a follow through. Billy. All right, Billy's making new highs. Billy. Billy, gap down, new highs, following through. It should be there. It should be +1. All right, so +1. Okay, so Boeing. All right, so you got these little dips here. All right, personally, I hate to say personally because I have no idea if this is going to turn into a big expansion day, like we saw here on was it Wednesday? I have no idea what's going to happen, but I do know that institutions are picking up shares, even after starting buying around 145, 150. This is up 60 points. Boeing has a good opportunity here. They've been making lots of sales. LA, you used to work for Boeing, right? Was it Boeing or Lockheed Martin? I forget which. Or Northrop Grumman, one of those companies. I think you used to work for them, right, LA? Anyway, this company is firing on all cylinders. It's coming off of a losing year, 2 years really, 2021, 2022, losing years, but we did bounce middle of the year, double bottom, and we're just getting started. 50% retracement be somewhere around 220, I guess. We talked about this earlier. Boeing weekly. Okay, this is the targets I'm looking at. Okay, so we're already hitting through many of these targets. 217 is the next level. Okay, and then above that is 278, 618. That's pretty good off of this low from the high to the low. That's 618. We're through that like it wasn't even there. Why? Because institutions are buying. You know, you can hate Kramer all you want or dislike him. You know, we joke about Kramer all the time, but every once in a while he will divulge some very interesting information. When he was working with Goldman Sachs, I'm not sure where else he worked, but I know he worked the margin desk at Goldman Sachs, and there was some discussions that he had about what is in the mindset of institutions when they're buying something like Boeing as it keeps breaking out, because we're all taught don't buy the highs because you'll get trapped, you know. But what's behind this move? Reorganization, more efficient management, more sales, flipping from a loss to a profit, 2 years of downtrend. Pretty obvious the institutions want to buy down here as it starts to improve and the company is turning itself around. All right, so this is phase 4 over here. This is the markdown. Phase 1 is the accumulation, moves sideways. Phase 2 is when what we're doing right now, 921, 50, 200-day, are all turning. The weekly's turning up, 10 EMA is turned up and to the right. All right, so SPY has just been sitting here while I'm yapping away under 386. I'd take more profits off the table. It doesn't look like we're going to make it through 386 right now. If we do, fine. Like institutions, you can always buy high and sell higher. For now, this looks like supply. All right, so having a good day. Cool. Oh, okay, so you see an ABCD pattern on Dino. Okay, so I do see it now there, Grover. Thank you. Dino. All right, this looks really good. At the 200-day, Dino at the 200-day. Thanks, Grover. For 3 weeks, 4 weeks. Yeah, that looks good. Above the 21-day, Dino Sinclair Corporation. All right, let me just check the earnings real quick. So we'll know whether this is just a scalp or a potential swing candidate. Dino. Trading at a discount. Dino trading discount to EBITDA, discount to free cash flow, discount to sales. Yep. Projections are that growth will slow a little bit, but still up 4.56%. Sales growth 4.56%. It is tapering off a little bit, but still looks really good. So this might actually go here. ABCD pattern might be a nice trade here on Dino. Watching for a B pivot. Hasn't shown a B pivot yet. RSI is oversold. Okay, you got selling volume here. You want to see the opposite. You want to see this here. Bullish volume. Billy. All right, Billy had a nice dip this morning. Some of you bought it on the dip when we mentioned it. All right, Billy is up over $1 now. NVIDIA, okay. Billy, nice mover here, Billy. Got higher lows. Look at the volume coming in right now. Volume's coming in right now. Billy. Good job there. Okay, HKD. I'd be really happy if this takes off to the upside and gives us some buy signals. All right, SPY, not giving it up yet. Not giving it up. All right, so the other thing is, in order to make that $250, $500 a day or more, it helps if the indices are moving. If the indices are moving in your favor. So I like to say we want to trade a top-down approach to the markets. Okay, so if the market index or indices are moving higher, the S&P 500, the sectors that we want to trade, if you're trading, let's say metals and mining today. All right, so if you're trading metals and mining, you can see over here, metals and mining are moving higher. So you've got the market index, the sector, and industry group. Sector is materials, metals and mining, industry group, metals and mining, and the individual stocks. You want to see all of these from the top down, giving you a bullish signal. That gives you a higher probability of success. All right, so XME is moving. The sector, the major sector is XLB, materials, metals and mining is a subsector, right? So big move on XLB. All right, so XLB. So top-down approach working there.
I took alert plus 800.
Okay, SPY trying to break out. All right, so this is pretty cool if we can take off here. 387 is the next level for SPY. All right, we got to break out above this level. It'll take out some stops. We'll take out some stops here. Squeeze. All right, let's see if this triggers. SPY. 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 Okay, we've been on a buy signal since this morning. We haven't triggered a trailing stop based on ATR. A trailing stop based on ATR, the closest one is 385.23. The furthest away is 384.34. So I'm watching those two as potential stops if SPY breaks out here. Trailing stops. Needs to break out here. Squeeze is tight on SPY. Okay, so we're looking for the move. Bears didn't expect this. I certainly didn't expect this kind of move today. Non-farm payrolls, everybody was apprehensive because of yesterday's move. We pretty much went sideways all day, above and below VWAP. today. Squeeze RSI's above 50, so we should see a follow through. MACD's starting to turn, volume's picking up, but we haven't broken out yet. We've got supply right over the top of this level. So if you're good at shorting, you know that there's supply right here. Your stop will be above this level. You'd be looking for a move lower. Right now, it doesn't look like we're going to pull back. It looks like we're going to take off to the upside. Still supply up here. If we take out these levels overhead, there's going to be stops up here. Traders who want to go short are going to have stops right above. Okay, here we go.
Tick alert plus
Starting to go.
800.
Starting to go. Okay, Meta. Nice move on Meta. Following through. SPY following through. There goes SPY.
Extreme high tick alert.
All right, there goes SPY. Nice little pop there on SPY. Thank you very much. Nice pop. Following through. SPY still following through. Nice. Market net flow, very green.
Extreme high tick alert.
Market net flow is green. Tick cumulative green. SPY. Nice follow through on SPY. Let's go some more. Okay, 387 is the next level. Billy having a nice day. Billy going green. Trying to go green on the day. Billy. Baidu. Nice move. Wow, Bed Bath & Beyond's $1 a share. Holy crap. BBBY. Whenever I go into Bed Bath and Beyond, I have to tell you, I never see anybody in there. Yeah, when I walk through the front door at Bed Bath and Beyond, I don't know if you're affected by this, but I walk through there. The fragrances are so intense that I can't even walk in there. Some of the other places like those candle shops and stuff, I just can't. It like chokes me. It's just unbelievably. I notice it a lot in Bed Bath and Beyond. Out of all the stores I go into, that one for sure. In and out. I get what I need and I go. I don't linger around. Unfortunate thing is I like checking out the kitchen equipment and stuff, you know. Lots of puts there, Lee Star. After hours. Wow. Nice move on SPY. Can we get going some more? SPY. All right, so we're going to go some more. If we get above 387, 400's the next level. All right, Billy trying to take out. I'd like to see Billy above 30. That'd be nice. DocuSign green. +2 from the low. DocuSign +2 from the low. Okay, we haven't followed through now. All right, so watch your positions. There might be an area where people will start taking some profits off. Can't get a follow through. Huya. Nice follow through on Huya. Let me take a look at that one. That's a cheap stock. Huya, another Chinese stock. Huya, nice follow through. Look at that 921. 50 days going to cross through the 200 days soon, probably 2-3 weeks from now. Intraday, trying to get back to green. 60-minute trending along at 20 EMA, a green line. Weekly time frame, all of these Chinese stocks are turning the corner. All right, SPY pulling back now. Wow. So Bed Bath & Beyond is preparing to seek bankruptcy protection in the coming weeks. People familiar with the matter told Reuters earlier this morning. Many of you are aware of that. We did the same thing with, was it Hertz? Was it HTZ? Is it HTZ? Yeah, Hertz. Okay. Hertz still hasn't gone anywhere. At the lows of this 2-year range, Hertz is still down there. So if you were looking for a bankruptcy type, there were times here where Hertz did make some money. If you were trading options, you were in and out. But overall, for the last 2 years, since almost 2 years since it went through bankruptcy, it's at the lows of the range. The highs 46 and 33, the lows right around 14, 15. So if you were sitting in here all of this time waiting for something to happen, you wasted a year and a half, with few exceptions. There were a couple of times where this popped. But sitting around waiting for a stock, that's not me. Now, something like Baba, that I know has plenty of earnings, just now moving through the 10 EMA. 10 EMA is tilting up into the right. This looks pretty good. So first level would be the top of this range, 125 to 130. Momentum indicators are turning. You can see this is rate of change. KST is rate of change. So it measures a short term and 3 additional rates of change against each other. You can see down here, it rates a 10 period, 15 period, 20, and 30 period. So when the 10 turns fastest, this crosses over, this turns rather, and then it crosses over when the 20, 15, and the 20 start to get momentum. Now all 4 of them have crossed and are moving higher. So the momentum is clearly bullish in something like Baba, which is trading at a discount to earnings. You might hate it. You might not want to trade Chinese stocks. That's fine. In that case, I would limit maybe my risk exposure by trading options, whether it's spreads or selling premium. But if this does continue and you continue to bring your stops each day up under the previous low of the day, 97.50, almost 10 points now. That's a good proposition. This is just getting started. It looks like that's got some headline risk. So there is a possibility that China could come out tomorrow and say, okay, Mr. Ma, Jack Ma, you've pissed us off again. We've taken the 1.5 billion away from you. I mean, that could happen. You have to be aware of that risk. So for me, that means I'm trading options. I'll do spreads or sell premium, but I won't take shares because I don't want to, I want to have control over 1,000 shares of Baba. I'll buy 10 calls. In the money calls, it's the same, almost the same thing. 66 delta, 70 delta, or whatever. I'll trade in the money, much less risk exposure, limited to the cost of the option, instead of having 1,000 shares, all right, or $100,000 worth of Baba. Why would I want to do that? I wouldn't. That's the answer. Not at this time, anyway, when the markets are still technically in a bearish trend. Okay, so much better looking candle today. So like Mikey was saying, first time that we've had a reason to think more bullish. Okay, that's the biggest candle we've seen from open to close. Next to this one over here, that hammer. Buyers stepped up to the low of the day. We're above the 21 day. That red line is the 21 day. 50 days right overhead. We are currently still down 19% from the highs. talk about something else here shortly. Let me just mark this up. I want to say something about SPHD. So we're still 19% off of the January high where the market's peaked. Okay, I'm going to just put this like this. That's major support in here. And resistance overhead. But we're still in a downtrend. We're below this trend line here. Okay. 200 day. There's your 200 day. 50 day. They're getting close together. If the 50 day and the 200 day cross bullish, that would be awesome. RSI is technically above 50 now. RSI is above 50. That's good. But we're still 19% below all-time highs. So let's go take a look at another way to make money in the markets, obviously. If you have a day job, is to use, one way is use ETFs, more of a passive approach. All right, buying dips. My favorite over the last couple of years, my favorite's been SPHD. Note SPHD is back to break even for the year. Okay, the S&P 500 is down 19%. We're back to break even on SPHD. All right, so I've been buying dips. If you've been trading SPHD, or I really don't like to say trading. If you've been buying dips on SPHD, then you're up. You're up on the year. I like to buy this one for the kids. They have shares. Every time there's dips, I buy these dips. All right, we're breaking the downtrend. We came back and retested it, and now we're following through. All right, so we're back to break even. I don't need this. Okay. So we're back to even. SPHD is back to even. Technically, we're 19%. Sorry. Let me just fix this right here. The good thing about SPHD, not only are we profiting because we're buying the dips, but we're also profiting because this doesn't just stay stationary at 1,000 shares. If I have 1,000 shares in this index or this ETF, I'm also getting dividends, and I have the dividends rolling over into more shares every month. This pays a dividend, and these are the stocks. Oops. These are the stocks in the ETF. Okay. All of these have been paying dividends. Most of these are aristocrats, meaning they've been paying dividends for over 25 years. Some of them 50 and 100 years. I think Coca-Cola's been around forever, right? Philip Morris. Okay, so technically when this pays a dividend, I think it's January 28th is the next time. It's every month around the 28th. I have those rolled into more shares. So I don't stay at 1,000 shares. I'll be up to 1,100 shares and keep adding shares and shares and shares because I don't need the dividends. I'm not retired, so I don't need the dividends. I just let it keep rolling over. So that's a beauty. That's a beauty right there. Okay, SPY still pushing a bit higher and flagging. It's a Friday. Maybe you want to start reducing your risk into the 12 o'clock hour. Let me see what these guys have to say. I hope I didn't numb your brain for that from that explanation of what I do with SPHD. But it's just another way to make money in the markets. I saw a YouTube video. I don't know what the YouTube video said specifically, but it was about Peter Lynch. If you have $1,000, what do you invest in? How do you make money? I got to believe he would say invest in an index. That's what most analysts will tell you. I like it. I like ETFs as well. All right, so SPY looks like it wants to go, right? I'm not going to follow. I'm not going to chase it up here. I'll buy a dip. It's dipping right now. All right. Bum, 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 bum. All right, SPY fading here. Watch for a fade. Watch for a substantial fade here. That would be a hoot if we give back a lot of this. All right, so VIX is moving up a little bit. Okay. All right, are we dipping again on Boeing? We did dip off the high a little bit, right? Boeing. No, we're still going. Holy shit. Boeing, monster move. Boeing up. It's only 2.3%, but still, it feels really a lot more, right? Boeing. Watch for a dip back to VWAP. That's very possible. Back below 385. We could bounce off at 385. There's a lot of things that could happen here. This looks like profit taking. It's a Friday, 12:15, so I'm not surprised. Okay, I got to take a break from talking so much. Let me put some CNBC on. I know it's going to make you crazy, but I need to take a break. Give me a couple of minutes off the mic.
I think you can paint tech with a broad brush. Certainly there, because of the indexification of markets, there's going to be some of that. But currently, tech is forecast to have declining earnings in 23, down 2% versus the S&P at up 5. We think it's actually could be worse than that. And that's Lee made a point yesterday about the Nifty 50 and the prices going in. These were great businesses in the 70s.
And he went down the list of XYZ bankrupt, XYZ bankrupt. He went down the list.
But there were many that outperformed across that time frame from an earnings standpoint, yet underperformed from a stock standpoint because multiples compressed. They were just too high going in. And I think what you saw in the pandemic, Scott, is that pull forward of demand that is going to lead to a very similar outcome this time. Right? We want to own these names over long periods of time. I think there's some of the great growers for what you get, but you're going to want to be underweight them right now relative to the market. And that's our view.
You having this back and forth on email with Weiss, who was, he was supposed to be here. He's a little under the weather. We hope he's feeling better, but he's feeling good enough to, spar with you via email, in which he comes back at you and says, which is factual, that the St. Louis Fed says most of the country is in a recession. And that's before the tightening has had a full impact, regardless of what Atlanta GDP is telling you and trying to make a broader trend of it.
I expected you to acknowledge that I used his line against him, right? When I said the Bears picked a good day to call in sick, he used to use that line all the time. How are you, Steve? I miss you. Look, the facts are what they are. I haven't had a chance to click on the headline that you sent, Steve, but I will say Atlanta Fed GDP through last Friday, all right, through a week ago, says the economy is growing at 3.8% real GDP. You look at airline travel, it's back at 2019 levels. You look at Las Vegas, Consumer Electronics Show, people are showing up, and things are happening, okay? I understand if you're in the housing market, if you're a home builder, it doesn't feel that way. And I'm not dancing on anybody's sorrows there. But the overall economy is expanding. That's what the numbers tell you.
So we went through tech. I just wanted to get that out there. I don't want to sidetrack us, but our chart of the day today is something that I need to talk to Bryn about because it's Tesla. Another new 52-week low today. You got the price cuts in China. That's a major story. We just refreshed people's memory. You sold GM, right? And you bought Tesla, and that was about the end of the year, right? And I think you bought Tesla, I have on my note here, 120. You sold calls against it. That's the strategy that we talk about on a regular basis. Do you have regrets that you bought that stock?
No, not even remotely. So, first of all, they are selling, they are doing very well in China. They have a bunch of competition. Really, their main competitor is BYD, which actually Buffett is an owner in the company. And so BYD has lots of models, a much cheaper price point. Elon said, I think he did a Twitter Spaces the other day, they're going to focus more on volume than margins right now. And they
Okay, I'm here with you guys. I'm just having lunch.
And so we want to be invested. And so what Pacer does is every month this strategy will come out. So next month it'll be PFEB for February. So this is just PJAN. It comes out the first day of January or the first trading day. It gives you a hard floor of a 15% downside. So the first trading day, you were at the SPY of 382. Okay, so 3820 on the S&P. It goes for 1 year. They do S&P options inside of that. It's a very plain vanilla strategy. So at the end of the year, which this will be up, if the S&P is above 30, let's say the S&P is at 3,400, this strategy will be worth 3820 because I have hard protection to 3250 on the downside. On the upside, because the volatility is high and they're selling options, this strategy has an upside of 18.5%. So I have upside participation of 45.30.
And downside protection.
And downside. So, right. So to me, in a year with a wide range of outcomes, I want to be invested. I love being able to tell our clients, hey, at the end of the year, you know the range of your outcomes and you're still invested.
Okay. Lastly, and this is new, is the Innovator U.S. Equity Power Buffer ETF, PJAN.
Oh, that's the one I just did. Cows is the last one.
Oh, cows is the last one.
PJAN is the one I just.
That's the one you just did.
That's the one I just walked.
Oh, so tell me the cows then.
Yeah, so cows has been in the strategy for a while, and I think if you listen to Lee Cooperman, listen to Jim, Jenny, Rob, it's all about free cash flow. And we want to buy companies that have high free cash flow. And so what this ETF does is it takes the 100 highest free cash flowing yielding companies in the Russell 1000 and it weights them not by market cap, but by free cash flow yield. And so what you end up with is, well, first of all, last year it was actually up 20 basis points, which is not surprising because these are the companies that have the highest free cash flow. And why is free cash flow important for those who don't, for the viewers that don't follow that? When you get free cash flow, what can you do? Dividends, buybacks, M&A, you have optionality. And we want our clients and our portfolio to have optionality, but to be invested.
Okay.
And so we think just those three together give our clients a good yield. You're invested, but you own great companies with a high free cash flow yield.
Sector healthcare. So staying with a theme that has worked.
Yep.
Briefly tell me that and I want to comment.
Yeah, I would have said consumer staples, but I think they're too expensive. And so healthcare in a slowdown, people aren't going to stop going to the doctor. They're not going to stop buying drugs. I just think healthcare has a good right down the middle of growth at a reasonable price.
Okay, quick comment.
Britain's in a bunker. She's going to win if the market goes down. There's no question about it. I have a different view over the time horizon. What she's doing, writing covered calls, having buffers, focusing on cash flow. Those are winning strategies in healthcare. Those are winning strategies in a difficult environment.
Okay, you're going to give your strategies next. That's Rob Sechin. He's on the clock. He's going to give his stock summit picks right after this.
Now.
Welcome back to the halftime report. I'm Contessa Brewer. Here's our CNBC News update right now. Mexican security forces arrested drug cartel leader Ovidio Guzman, the son of jailed kingpin Joaquin El Chapo Guzman. That move triggered a wave of violence in the area that resulted in the death of 19 suspected gang members and 10 military personnel, according to Reuters. The Buffalo Bills say Damar Hamlin's breathing tube has been removed and he's been able to talk to his family and medical team. The Bills said Hamlin is making remarkable progress in his recovery after suffering cardiac arrest during a game in Cincinnati Monday night. Hamlin also joined a team meeting by video today. He told his teammates, "Love you, boys." And the Mega Millions jackpot tonight has soared to nearly $1 billion after there was no winner Tuesday. This jackpot is estimated to be $940 million. It would be the sixth largest in U.S. lottery jackpot history. And Scott, if we were to put this in halftime language, there is real risk, but the potential return on investment is remarkable.
Yeah. Well, I don't know. I'm in it, so let's go. Let's go. Yeah, the probabilities are very, very low. Thanks, Contessa. Our annual stock summit continues now. All right, Rob Seachin, you're on the clock. You have a couple of repeats, okay? And you had a good year last year, too. JP Morgan was your stock pick last year. Obviously, the financials didn't have a tremendous year. EOG, was energy your space last year?
Energy was my space last year.
Obviously, with that. So you have a new sector, which we'll get into in a second. But JP Morgan is back. EOG is back. Meta.
Oh, yeah. We'll talk about it.
Go ahead.
Talk about it.
Go ahead.
You ready to go to Meta first?
Go Meta first.
Okay.
Go Meta first.
So we call this our friends in low places trade. Okay. So it's cheap. Trades at 12 times 23 of 22, obviously truly abysmal. We've already seen a meaningful reset in earnings and expectations. Jimmy will tell me it's a value trap because the business is broken. But Meta's forecast was cut 45%, and its free cash flow forecast cut 66%. And I think it's very dangerous in that space to be so underweight that stock when there's so much upside associated with potential surprises, like a reacceleration in their core business, which could happen. Headwinds from Apple's policy change dissipating. And then there's TikTok, a lot of political risk around TikTok, which could help Reels. We don't like the heavy CapEx. We don't like that Zuck does that, right? But hopefully he gets religion and refocuses on the core business. So
he's got a lot of pressure on him to do that.
Yeah.
Right. From, Brad Gerstner, Altimeter, obviously laying out his case very publicly as to why they need to tighten the belt, which they seem to be a little bit more maybe than they had been willing to admit in the past.
So we don't think it's a value trap any longer. We thought it was for a long time. We think the catalysts exist and are there. We own the stock recently. And, my view is if you want to win this game, you got to have something in there that, allows you to.
Oh, what about, why JP Morgan and EOG again?
So JP Morgan is the one stock that didn't perform last year for us. And there's a reason that we want to own it this year. If there's an economic hurricane, we want to be in the best boat. It's a little disingenuous. We own Jefferies too. We had it going in, but kind of prior to this, they had a big announcement, and so we couldn't put it in here. It wouldn't have been fair to do. But financials overall have a really low bar this year. And I think you had a bunch of people pick financials as their sector.
We did.
It's obvious as to why, because it's a low bar to jump over.
And yesterday said they're cheap.
Yeah. And there's an argument that can be made that they took all the pain last year in loan loss reserves, right? So they had their difficult time last year, and now there's some economic upside to this now. And there's an argument to be made if we go into a recession, JP Morgan could strengthen their grip in that type of environment, and the leadership will certainly show how adept they are. Plus, it trades at 1.3 times book. It's bottomed at 1.2 almost every time it's bottomed.
Okay, so let's move. We don't need to do really a lot on EOG, right? I think people get it, right? It was up a lot last year.
Last year was a layup. Last year, energy was a layup.
Okay.
This year, it's going to require execution, and this is the best team in the industry to execute.
Okay. Why did you switch your sector if you obviously are still bullish on energy? Why'd you go to aerospace and defense?
Because
ITA.
Because it's not the layup it was. Energy is not the layup it was. You have to be surgical now. Last year was just a very obvious trade that you could pick everything. We want to play defense and offense at the same time. Defense because of government spending and the like in this space, and offense because of the recovery in commercial aerospace. So we think those things are happening, and they're unlikely to get pushed to the side, given what's happening from a geopolitical standpoint, given what's happening because there's so much underinvestment in the aircraft by the aircraft industry in planes. So Boeing, Raytheon, they make up a big part of this. Okay, great trade.
Comment from Jim.
Start with a positive. You are very consistent with your overall outlook, right? You are playing defense, JP Morgan and defense and aerospace, no pun intended. And you've got this flyer in Meta, just in case things go right. I get it. I really would have liked to help you get a better flyer than Meta. To me, that seemed, look, by the way, you went through, all you were talking about were risks. I was listening to you, I was like, when did Rob become insecure? Like, it doesn't work. It's not a suit that you wear well, don't do it, okay? Find something with more opportunity. This thing has declining earnings last year to this year to next year. That's not where I would tell you to take a flyer. But I understand what you're doing, and you're being consistent in your thought process.
Okay, he says thank you, but no thank you. Right? I see a look on his face.
We'll see. December 31st.
Yeah. No, I mean, look, this is not necessarily a contest. You guys may view it as such.
We do. We definitely view it as a contest.
I mean, we're just trying to, not we, you are trying to make some money or protect from losing.
Or both.
That's true. Good point. More stock summit picks are coming up next week. We'll take a quick break. We'll come back to talk about energy. It is coming off its best year on record. One of those big winners, though, got a downgrade today. We need to discuss that. We'll do it next.
I'm here with you guys. I'm just eating lunch.
Bank of America market today downgrading Chevron. We call the energy stock a victim of its own success. We've made it a call today. I want to go to you, Nick, because you have a lot of energy exposure. A victim of its own success. I mean, you could theoretically say that about 50 different energy companies that went up a ton last year.
The whole sector. I think the whole sector the last 2 years, right? So you've definitely seen a reemergence in the energy space that I don't think is going away. I think the secret's out, we need fossil fuels. So I think you're going to continue to have more investors come back to the space. That being said, you have to have a year of digestion. My opinion is this year is going to be more about the dividend yield on the companies versus of the capital appreciation, which far outweigh the dividends that you got this year.
You mean the idea or possibility of them being cut in a slower economic environment?
The majority of your return could come from the dividends this year, right? Chevron doesn't have that high of a dividend relative to some of the other names, but they were such a big contributor to the S&P last year. I think for 2022, they'll contribute $26 of earnings. They're expected for this year to only contribute 24. So I just think you could easily see their earnings slightly decelerate. And so from that perspective, I think you want, I mean, it sounds like I'm talking my book, but you want to own the names, collect the dividends, and sell calls against them. I think that's a better way to play it.
So Jimmy, Exxon, I think, was up even, tremendously more than Chevron. So you could say that's a victim of its own success, perhaps. I mean, is it time to look at some of these names and, you know what they say, right? Pigs get fat, hogs get slaughtered.
Yeah, I think it is time to look at them. I will tell you, though, I'm not selling, at least not yet. But yeah, I'm looking and thinking like this. I read what this analyst said, and he seems to be keyed in on the fact that energy prices have been weak for quite a few weeks now. And that's true. And I think, Bryn, what you just said about maybe this is a year in which we consolidate a little bit more. I think you're going to get more than the dividend yield, and here's why. I mean, ultimately, the demand is there for fossil fuels. One thing that doesn't get talked about is the strategic petroleum reserve that always gets caught in my mouth. They're refilling that now. They're buying prices along with everything else going on in the world. Quick, Rob.
All right. So we're in the evening session. We got about 15 minutes to go for 1 o'clock hour. 12 minutes to go. It's 12:48 on the East Coast. This is your host, Cousin Benny, coming to you from theclosingprint.com. It is the 6th, Friday the 6th. Looking for direction for the evening session. Looking for a bounce. All right, a little bit of a bounce. We're still fading, though. Need to stay above 385. Pretty bullish looking day on the daily candle. So I'd like to keep most of these gains if you're bullish. All right, market net flow has been fading since about 12 o'clock. It was very green this morning and been fading since the top at around 11:45, 11:50. We started to top out. Market net flow started to fade. We'd still have a green signal on tick cumulative. Still green, and we're trading. Market internals are pretty good. 4-to-1 up volume on the NYSE. 1.5-to-1 up volume on the NASDAQ. Doesn't look like we're going to make it a little bit higher here. Looks like maybe. Let's see. Market net flow starting to turn upward again. puts are very reserved for the most part, staying near the lows.
All right, welcome back to the halftime report. There he is, senior markets commentator Mike Santoli from the Exchange for his midday word. Doesn't take much. Doesn't take much.
No, certainly not once the
More selling. You hear that selling flow in the background? That thumping.
response, I think it's tough. The sideways. 3 or 4 weeks.
All right, Billy fading from 28.75, fading a bit. Lulu trying to bounce back towards VWAP now. Lulu's up $3.75. Meta near the highs of the session, trying to get above 130. Netflix just off the highs, 311.19. Netflix. Boeing looks like it wants to turn back up again. Looks like an A, B, C, D pattern on Boeing. A B pivot right here at VWAP. Watching Boeing here. All right, so this is the time of day. If it wasn't Friday, I'd be more emphatic on these pullbacks. You know, you got like A over here, B. Looking for C and D. Looks like it wants to keep going. I don't want to chase it up here, though. You could scalp it. Perhaps you could scalp it. Boeing looks like it wants to keep going. You got about $1 between here and there. All right, if we start to drop a little faster, 385, watch 385. See SPY, 385.64, 100,000 shares. It looks like it's shorts there. Looks like these guys are shorts. Bearish below those. Not a lot of volume here. VIX, very tricky area. It's Friday. We've run up. We're up 6 handles on the SPY. 60 handles on the futures. Wouldn't be surprised to give some back here.
Mr. Mike G in Orlando, Florida, bought 30 shares of NVIDIA at $228. Bought 20 more as it bottom, holding 50 shares, average price 186. So it's down 22% from 186.
SPY looks like a short. SPY looks like shorts here. We're starting to lose this level. 385, watching for a bounce. Too close to 385 to take some long puts here. I'm more concerned that we might bounce.
I'll give you a C.
All right.
Yeah.
All right.
C.
Grade what you grade.
Yeah.
All right, Rob, you're up next. This is from Mike in Oregon. Bought Fortinet on November 3rd at $43. I'm a long-term investor. What do you think? It's up 12% since then.
Yeah, I'd give him an A. He stepped in right after they delivered and then gave negative guidance. The stock sold off. He picked it at the right time. It's 20% long-term grower. So nice job.
Okay. Jimmy, your last. This is from Steve in France. Thank you for writing in. Delta Airlines bought Delta, Steve says, at $33.35 just a few days ago on January 3rd. I've always avoided airlines, he says, but they're taking off. Are they taking off in 23?
It really looks like it. You look at TSA traveler throughput, we're back at 2019 levels, solidly staying there. Demand is there. Prices are good for tickets.
All right, if we drop through this area at 385, 384 is VWAP. SPY. Maybe take some profits off on Boeing. It looks like it wants to keep going, though. All right, so if we drop through 385, look for a test of VWAP. Yeah, I said the same thing. Thinking the same thing. All right, if we bounce off of 385, we could just continue this channel down until we snap through 385 or bounce. A decent level to bounce. Okay, so far we're bouncing. Market net below is picking up more green. Have a good one then, Mikey. Take care. All right, do we go? Do we don't? Or not?
All right, overtime, 4 o'clock Eastern, a few hours from now. Hope to join me, Joe Terranova, with us to end the week. Former Dallas Fed President Richard Fisher, too, on whether today's report was a game changer for how we should think about what lies ahead for the Fed. He'll tell us. Let's do final trades. We're talking.
Quick one, my favorite sector for the year, healthcare, Pfizer. Last quarter, they grew revenues by 7%, earnings by 27%. I think it's a growth at a reasonable price.
Okay.
I'm going to go with healthcare too. Cheapest defensive. I'm going to go with Lilly. Premium valuation with great fundamentals and best in class top and bottom line return growth.
So we're still trying to stay.
Eli Lilly.
That worked real well last year. I guess that gives you, well, I mean, it just gives an idea of where risk overall is right now, right? It plays
place to the sentiment that's out there now.
And positioning, right? We're ripe for a rally like today.
We'll see what happens next. All right, Farmer Jim.
I know I mentioned it earlier, Scott, General Motors. What I didn't mention is as these chips are being delivered and the cars are being produced, there's pent-up demand because people are driving their old cars, driving them into the ground. They need new cars.
See if they go buy them. All right, those are your final trades. I will see all of you in overtime in just a few hours. It does it for us. Great weekend. These changes.
Looking for a follow through.
Thank you very much, Scott. Hi, everybody. I'm Kelly Evans, and here's what's ahead.
All right, looks like we might actually rally here.
String of bad economic news. Softer wage growth, a report that says the services sector is now in contraction. Is it all enough to change the Fed's higher for longer plan? That's what the market seems to be signaling. Look at how it's playing out from the macro to
All right, nice little reversal back. 385 is where we flip from bullish to bearish. Below 385. Looking for push higher now. Do we follow through or not? Market net flow is green. Tick is green. Our market internals are green. 4-1, almost 5-1 up I am. But we're still drifting lower.
also just under 4.3%. But look at this spread. We have the 2-year, the close yield, over about a point almost higher than the 10-year yield. That brings us to the 3-month 10-year spread as well. This is a big headliner today, hitting the most inverted level basically in history, in recent history, in about 4 decades or so. Pretty much as far back as our tracking goes for this. This is negative by a full point, the 3-month 10-year. And as you just saw with the 2s, 10s, very similar story. Doesn't bode well. We'll come back to that in a moment. But the chip stocks, which had been tumbling in December, are among the biggest winners today. Micron on pace for its best week in over a year. Lam Research up 5.5% right now. Different story for Chinese EV stocks. Xpeng, Li Auto, NIO, all sharply lower. Xpeng is down 15% right now, but check out Tesla, which has turned positive despite this backdrop and after initially falling about 8% on news of those steep price cuts in China. We'll have more on that story a little bit later on. But let's get right to the big story of the day. Are we already seeing enough of an economic slowdown that the Fed might call an early halt to rate hikes? We have slower wages, contracting services, and a deeply inverted yield curve. Could it even trigger a change at the Fed's next meeting later this month? Steve Leisman has a look at that macro picture for us. Capstone CIO Mike Moseley is here with the market impact, and MasterCard's chief U.S. economist. Welcome, everybody. Steve, let's start with you.
The answer to all your questions is no, Kelly. There are 2 big economic stories today that have ignited a massive rally in the bond market. It's driven down yields, propelled stocks. Take a look. You can see the 2-year yield fall in 2 steps. First, the jobs number came out, then the ISM Services Index came out again, taking nearly 20 basis points off the yield. So what did the data say? Let's go through it. Headline payroll growth at 223 came in a bit above expectations. Unemployment rate falling to 3.5%, down 3 ticks. But prior wage growth was revised down. The December number was a modest 0.3%. Participation rate growing by 0.2%. More people in the labor market. That means less wage pressure. Revisions took up 28.
We're managing to stay above 385. If we drop below 385, then we'll probably test VWAP. Still looks pretty bullish as far as market internals. All right, so far 385 is holding. We're starting to push back up. Shorts covering. All right, looking for B and C pivots during this time of day. Your favorite stocks. Let's go check out Boeing real quick. All right, Boeing, new highs of the day, Boeing. Trying to break a bit higher. We're holding 385 so far, but we're not able to push through 386. Looking for a push. Boeing, high of the day, looking good. All right, Boeing just looking splendid. New high of the day, Boeing. It's Friday. As such, taking fewer positions on these pullbacks that we would normally would take these Monday through Thursday with the rest of the week ahead of us. But on a Friday, I'm less apt to do that. I'm more interested in taking profits near the highs like Boeing right now. It's okay to take profits up here and then come in next week and see if we can get a better entry or if it follows through. But I'm starting to close positions. There you go. SPY lifting a little bit more. All right. It looks like we're going to go. Boeing. Again, I'd be taking some profits off into strength. It is a Friday. NIMO is plus 54. NIMO plus 54. Having a good day. The dollar, the 10-year, the VIX are all lower. All right, daily momentum is improving. We've got NIMO at plus 54. We got the 10-year, the dollar, the VIX all lower. That's bullish for equities. All right, nice follow through. All right, could be a bear flag. Looking at this lower high. Good thing is that we got the VIX, the 10-year, and the dollar at the lows right now. But we could also bounce signals. Mostly bullish. Price action fading.
To look for some potential support for the clients.
All right, so basically don't give too much gravity to the recent run-up we're seeing because momentum is waning. We still are seeing things somewhat break down overall. Despite that, has had a nice week, of course, up about 3%, but up today. But considering the overall market, I do think this is a name that does have that risk. You know, anytime we hear something about the consumer or spending, this is a name that could be impacted. So really interesting chart.
All right, Boeing, take some more profits off. Boeing starting to top. Yes.
Yeah, I think this is a fun one because the technical say one thing, the commentary says sort of the same thing, yet the conviction and the price target and the rating suggest another. So I kind of wanted to split the game here and do a little bit of a neutral to bullish strategy. But it's also somewhat omnidirectional. As you'll see, the best case there is actually a lower price on this one.
Yeah, Microsoft. Looking for higher lows and a higher high. Microsoft's been off this week, so it looks like some short covering. A nice support zone.
Looking at buying one of the 320 puts, selling two of the 310s, then define the risk by buying the $20 wide 290 put to create that $20 wide put credit spread that converges with the $10 wide put debit spread. This is done for a credit of $1.25. So if all of these options expire worthless, aka the stock is above 320, that'd be your most likely scenario for that to happen. This keeps the credit received. So 125 would be the best case scenario in that case, net or not net of any of the transaction fees. So next, what gets interesting though is as you see, looking at the risk profile, levels off and it spikes up and it peaks out before turning sour as the stock price moves lower. It peaks out at that 310 mark. The reason being, you're buying one 320 put, selling two of the 310s, and then you're buying the 290. So where those spreads converge at that 310 mark is the best case scenario. Reason being, the debit spread goes close to full value, credit spread works its way towards no value, then it can expand, you keep the credit as well, 11.25, theoretically that max profit. Not the likeliest of scenarios, but it does correspond a little bit, Jenny, with the level that Rick had highlighted around 307. It's actually the closest strike to that that we could have used. And so kind of coming together here, it then turns after that with a break even at 298.75. We're losing max value below that mark of 290, in which it does have a full 875 at risk. So we'll be looking at this one to basically stabilize, but in the event that it eases lower, this one could stand to really gain from that.
Right, and of course we are risk defined here in both case scenarios. But now our next thing, I don't really know the tie-in to Lululemon. lemon and love, other than the tickers start with the same letter here. But Southwest, to me, this is a complete mystery. We see all these negative headlines. They disclose these fourth quarter preliminary numbers that don't look great given the fiasco that happened over the holiday. And Rick, they're still up 1% for this week. They're still well off their 52-week highs. And I will say there was one single stock that I checked while I was on vacation last week, and it was Southwest. And it didn't look too pretty last week, but this week, all things considered, they're doing quite all right.
Not only are we up today, we're forming a type of bullish candle pattern. We've got a bullish engulfing candle where the real body of today's candle completely encompasses the previous day's candle. So this is typically regarded as a more bullish signal here. So I got to admit, I was scratching my head a little bit as well, given the large amount of bad news today. But, you know, the stock is showing some resiliency here. And this is an interesting one because even though the broader trend, it still looks like it's mostly down overall. We did kind of squeak out some higher highs. See, we had this previous high here in our recent rally off of those yearly lows, did wind up making a higher high, and we made a higher low here as well. So it's looking like you could make the argument we're in a very wide upward sloping channel here. But couple that with the moving average that we follow here, the moving averages are all trending downward. So it's kind of this juxtaposition here between what the price is doing recently and our technical indicators that we follow here. So we can see that
All right, a little bit more follow through, higher highs, higher lows.
farther apart from each other to the downside. They're not really showing much improvement yet. So I would be kind of wary of thinking that we're in for some kind of upward trend here at this point. So looking at the RSI, we did have a brief dip into the oversold area as we bottomed out once again near the 33 level. So that was a bearish signal, but we crossed back out of it. So that was kind of negated there. It's still not looking like we're quite out of the woods yet, though. We've still got to get above this yellow 21-day exponential moving average near 35. That would be the first resistance point. Many traders likely would have their eye on here. That would also be an area where we would fill some of these gaps in that we're creating during this most recent leg downward here. So if we were able to get up to 35, 36, that would fill the gaps. And then, we have to see what happens from there. 31 to 33.
All right, looking for this cycle to continue. SPY, a bullish cycle.
This area between the lows and the trend line could be an area where buyers might be willing to step in. And to the upside, we've also got our two moving averages here. 21-day, then the 63-day just above that near 36. Those would probably be the areas we need to bust through in order to get some upward traction going.
Rick, and I think you make a really good point with all three of the moving averages now trending lower. Perhaps the reaction we're seeing isn't as bad as we would think, but it's still not necessarily great. And I do think that's important to point out. I keep harping on the fact they're still positive for the week, but not necessarily making crazy gains or anything. They're just doing better than I think what many would expect given the headlines, of course. But appreciate all your technical insight with Steve Pat, our chart master for today. Have a wonderful weekend. And now, Alex, when trading this name, I mean, I do have to say that Southwest has a very little consumer. I know that this
High tickler plus 800.
season, but I have to think that typically that people that love Southwest will probably continue to book with Southwest because
Nice follow through so far. Whoops. Nice follow through so far.
I also just think the fact that now they've dealt with all these system issues, they'll probably be pretty reliable.
The 10-year, the dollar, and the VIX, all at lows.
Going forward, but nonetheless, technicals point to some negatives here. We are seeing price hold though, so again with another neutral to bullish strategy.
All right, nice follow through SPY.
Situation where classic kind of contrarian logic could be applied. So you're looking at a situation that's likely to be a one-time sort of a known impact now. They've talked about what they're going to do in response to it and how they're going to remedy the situation. You did see a sell-off in the reaction, and now sort of a stabilization taking place. So a contrarian might look at this and say, hey, despite all this negativity, this is actually an opportunity to buy this company, although it may seem kind of counterintuitive when we read the headlines. I think we're seeing that a little bit in the reaction. Obviously, the stock's doing relatively nicely compared to the story. But Rick talked about all the reasons why maybe sustained upside could be difficult. Talked about the overhead resistance from both those moving averages, kind of the general downtrend that was already persisting leading into this situation. But also, maybe you're looking at this and saying, hey,
nice follow through, SPY. SPY, nice follow through.
Because there's still uncertainty, I look at a risk-defined trade, but they'll lean into some of this recent weakness, acknowledging some of the recent strength as well, and acknowledging the general trend. And so selling a put vertical out of the money going out to February, the 32.5, 30, the $2.5 wide spread are available here. Looking for a 50-cent credit. If we got that 50-cent credit, it would give a break even of 32. What I found really, really intriguing is that 32 break even basically goes to the lows of this most recent move. And so if that low level from this kind of down move around the news holds, well, that's break even in this February expiration. It's neutral to bullish. It's done for a credit. All it has to do to get max profit is stay above 32.5 over the next 40 or 45 days till that expiration. You keep the 50 cents as a credit, which is actually $50, not accounting for the transaction fees. And these options hopefully would expire worthless in that case, and that would be our best case scenario. But in the event that, hey, something else comes out, some other reason, be it unknown or known at this point, worked us lower, we're risk defined. Breaks through 30, can't lose more than $200 on this one. So 4-to-1 risk-reward ratio on this, Jenny. Capital efficient, high probability strategy, neutral bullish, a little bit contrarian to the news.
And a nice move today of 2.5%, but also important to keep in mind for both of our example trades today. Of course, multiple legs can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, we will talk all things DraftKings, lowered price target at Piper Sandler, but the stock does not seem to care. Shares are up over 100%.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trading. In the options for volatility course, we explore what implied volatility is, how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish. So looking beyond direction to consider the impact of implied volatility can help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the education tab on Thinkorswim for the full options for volatility course and a whole lot more.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange, new location with access to the biggest newsmakers in Wall Street, bringing new in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers.
All right, SPY just grinding away here. Kind of boring at the moment. Not much movement. Not a lot of volume. People checking out for the weekend. We're above 385. That's a good level. We wanted to push above 385. SPY blocks 379.41 coming through again. That was yesterday's closing level. All right, 379. 379. That's yesterday's closing level right there. We have two blocks of 250,000 shares each trading right there just now, hitting the tape as we push higher. More profit taking into the highs.
High took alert plus 8.
All right, nice pop. All right, nice pop in SPY.
At 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TV Ameritrade Network.
Opportunities can be hard to find, like catching lightning at a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture.
SPY high today, 386.72. Looks like we're going to go back up there and test that.
Asset class to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Time for developing story. Joining me now, TD Markets correspondent for the TD Ameritrade Network, Mr. Kevin Green, is here. Got your eyes on the banks, KG, and I just happened to take a little look. We have earnings already next week. I just caught my breath from the last earnings season.
We're definitely kicking off earnings next week, especially when it comes to the banks. And usually JP Morgan kicks it off here. But yes, we are seeing Deutsche Bank actually cutting Bank of America and JP Morgan today to a hold from a buy rating here. And what they did, they actually cut the price for Bank of America to $36 from $45 a share. And then for JP Morgan, they cut the price to $145 from $155. Now, they do acknowledge that they do believe that the end of the Fed tightening cycle may be near and that the market is potentially looking at coming into a recession or maybe having a light recession, but we do not believe that these stocks will truly reflect the overall impact a recession could have on consumers. And so they are moving these two stocks to the downside when it comes to ratings as well as the price adjustment. Now, what's kind of interesting here, Alex, you're going to get into a phase in the marketplace, especially for financials, that we haven't seen in a very long time. We have rates that are this high. You are going to start hearing about net interest margin and net interest income for a lot of these financial institutions. And
All right. Meeting a little bit of selling here. SPY at the highs.
Especially the two that we are mentioning today. So that is actually a very interesting dynamic as we see this cut, but we know that the rates are going to be higher and they should be able to make up a lot of headway when it comes to that net interest margin side of the business here. But overall, they do believe that the consumer may be impacted and that we might not see as much consumer transactions going on, which could also impact stock. That's why we're seeing a downgrade.
Yeah, and all these banks, they're related, but they all kind of got their own quirks and niches in the same way. You know, Goldman isn't the same as Wells Fargo, isn't the same as JP Morgan. But all eyes will be on Jamie Dimon and JP Morgan next week, no doubt about it. What I noticed just quietly, JP Morgan's been a huge winner over the past 3-4 months, rallying like 35% in the shadows.
It's always, usually you actually see this when it comes to a lot of these financial companies. Citibank, really, Citigroup actually was kind of the same way about 4 months ago. We saw a significant move to the upside after Warren Buffett actually made a little bit of an investment in there. So yes, we are seeing a little bit of a rebound, but you are correct. Each one of these financial institutions are different in their own way. JP Morgan has a lot more international exposure, does rely a little bit more on the trading revenue as well. Goldman Sachs relies more on the trading revenue. But if you look at Bank of America, they really do focus on the lending side of the business and attracting customer deposits and really that retail banking side.
All right, so Boeing
Jamie Dimon's. Keep in mind,
All right, getting a little dip here on Boeing. SPY looks like it wants to go a little bit more.
Show that the economy is slowing, but it could be getting us closer to the end of the Federal rate hike cycle here, and so the reaction to that's going to be very key.
Yeah, we'll see what tone is set as they are set.
Looking for a close near the high of the day. Thinking the same thing, Grover.
And thanks for joining us, Senior Markets Correspondent for the Ameritrade Network. Jenny is back here with us. Time for FOMO and drifting not so far from the, financial services. We'll go to the sports gaming world. We'll talk some DraftKings.
I'm so bitter about the sports gaming world because I got third place in my fantasy football league and I should have gotten first. And that I can't even go.
Story as old as time.
I know. I feel like I act like I could be playing football and making a difference to my team. But nonetheless, I started my day, Alex, today talking about the job support, and I wanted to highlight something I thought.
Bank of America. A lot of the banks look good, right? Bank of America trending over the last few weeks. Trying to get above 35. Bank of America. Win at the highs of the day. Win.
67,000 jobs in this current report. 25,000 are amusement, gambling, and recreation. So this is still an area of strength, an area that's growing, an area that definitely is developing. And you do see that in like DraftKings and some of the shortcomings, but nonetheless an area that also employs a ton of people, not necessarily just DraftKings specifically, but I thought that gambling component of leisure was interesting this morning. But the news we got today, specifically to DraftKings, was Piper Sandler lowering its price target to $15 a share from $21 with an overweight rating. The analyst said after an unpredictable 2022, vertical marketplaces enter 2023 with continued macro pressure, particularly around consumer spending, digital advertising, and the jobs market, which is, again, another tale as old as time. Now, he noted that uncertainty still exists and they aren't certainly out of the woods yet, but they feel that uncertainty is more of a known.
SPY trying to get there to the high of the day. Signals are pretty strong. The dollar's lower. The VIX is lower. The 10 years lower.
Or slightly bullish. 5 are indifferent, and only 1 leads slightly bearish. So another name that the street still feels pretty positively on, and it does still have an average price target of just under.
All right, SPY drifting higher.
$20 a share, which implies a good deal of upside and is still well above this analyst's $15 price tag. So this analyst did highlight that there is necessarily doom and gloom for DraftKings, but this is a name that is in a fairly speculative space. Of course, gambling is not necessarily legal throughout the United States. It is growing.
All right, SPY blasting higher.
Plus 800.
Yeah, well, so this is where I'm glad you brought it here because the concept of gaming is not new, right? It's a somewhat proven business model. A lot of the legacy casino operators, we know them well. The MGM,
All right, SPY breaking levels now. SPY breaking above some levels. The fact that they're doing this at this time of day is very indicative of intent.
Seemingly getting lower and lower, that's going to, of course, impact the bottom line. But what's different about a DraftKings or a Penn Gaming or Penn Entertainment with Barstool?
Yeah, Boeing, we had a good week. We had a good week. I'm looking to trade it again next week, but I'm in no hurry to chase anything. We had a good week, so take some profits off and enjoy it. Yeah, JP Morgan I like as well. JP Morgan. You got into that earlier in the week. I didn't join you. JP Morgan, great entry.
Possibly better deals for the consumer participating. Only time will tell. But let's start trading this one. Beaten down. I mean, back almost that $10 price that the SPACs all start at.
Tesla trying to hold this level down here between 105 and 125. Basing a little bit. All right, SPY still going. SPY breaking out above levels now. Okay, what's Boeing doing? Boeing, I see some of you took profits. Still could see more highs, but you know what? We've had a great week, so why ruin it by trying to chase it right now with an hour and 20 minutes to go? 2 hours and 20 minutes to go. SPY. $386.72 is the high of the day. Looks like 386.76. We were just tagging there. 386.85.
Shares are down over 71% off their 52-week high. Although perhaps looking to end this week on an optimistic note, shares are up about 1% on not so positive news. We'll dive into this one with Caroline Woods coming up next.
Whether you're an experienced investor or just getting started,
Paramount, nice turn. Paramount had a nice turn there. Looking for a follow through in Paramount. Earlier in the week, and again yesterday, we were talking about Paramount. As it pushed through on Wednesday, Thursday, Friday, it looks like 20 is next, 2050, more or less. Volume shows institutions are buying. Volume by price shows that this is the accumulation phase. This is marked down over here. Marked down from the highs as it continued to drift lower below the 10 EMA. 10 EMA was dropping as well. Weekly, 10 EMA went sideways, and now we're starting to turn the other direction. Daily is showing a potential trend change. It still needs to get above a trend line that comes out right around this level right here around 1950. If you draw a line from the tops here. And if we can get into this area over here, we could see a run to 21.22 in the short term. All right, SPY looking for a bounce. NVIDIA is up $5.21. Turning the corner, NVIDIA turning. Pinterest, turning on Pinterest.
The news cycle continues to beat down on Tesla. Welcome back to Next in Investing. Jenny, let's talk some Tesla. Daily appearance on the show, but looking at the candle today, you would think that there was positive news.
Right, and actually, I think this is my first time talking Tesla all day, which is something I have been able to say really throughout the rest of the week. Not positive news, cutting the price of its Model 3, Model Y in China, which is China seems to be right now this looming issue.
Netflix near the highs. That one had a good run there, Netflix.
So Caroline, it's been a brutal, I don't even want to say brutal week. It's been a brutal 3 months for Tesla, but shares are down around 10% week to date now at this point. But further bad news today, and I almost think this is more important than any of the other sort of drama surrounding Elon Musk, because the fact of the matter is they are trimming their prices to account for softening demand.
Hey there, Jenny. Yes, it's not my first time talking about Tesla today. I've been talking about it all day, and it looked as if on this news, Tesla cutting prices in China that shares were going to sell off sharply. The pre-market shares were down as much as 7-8%. Now we're looking at Tesla shares up about 1.3%. So taking part in today's rally. Not sure if it's seller fatigue or
all right, SPY.
lower prices will actually boost demand. But let's actually go through these figures. Tesla is cutting prices on its EVs in China by about 6 to 13%.
SPY just won't quit.
Deliveries fell sharply in December to 55,800. That's from 100,000 in November. Of course,
SPY just won't quit.
Scale too, Q4 deliveries hit a record of 405,000, but still fell short of estimates. So we've seen Tesla shares get beaten up because of that. So a Model 3 is now priced at about $33,000 US. That's 13% lower than previous, and about 30% cheaper than the same car here in the US. Model Y is just under $38,000 US. That's the 6% price cut. You talk about softening demand. Obviously, that's the key concern here amid all these macro issues, as well as, of course, a competition that continues to heat up. But there was a post on a Chinese social media platform where a Tesla executive said that discounts were the result of engineering innovations and calls from Beijing to
Paramount.
economic developments. So I guess that sort of goes against
Looks good.
a demand issue, but I think it's safe to say demand is obviously still very much a concern. I did also see reports that people in China were flocking Tesla stores, crowding the stores after these price targets were released. But Electric is reporting that it's actually because they were protesting the price cuts. There's nothing worse than buying something and then it going on sale soon after. So,
All right, Microsoft following through.
Tesla customers there doesn't appear to be weighing on the stock though, up about 1.2% today.
Yeah, Tesla hurts my brain, Caroline. I try so hard to look at this stock and be excited about the headlines, but they're never ending. But we're talking about a stock, I think Jenny said it's down like 70 or so percent, let's say, from its all-time high, somewhere in that vicinity, okay? It's still $350 billion. It's still gone 500% higher over the last 5 years. It's 10x off its lows over the last 5 years. And we know that there's no more polarized stock. You got the $5 price targets, and you got like the $7 million price targets from some. And it's been like this giant tug-of-war battle that one side gets the momentum and just relentlessly pulls. But the Bears got back up.
When Resorts trying one more time to take out the high at 95-ish. Trying to take out 95. When Resorts looks good. Been on a buy signal all since about 11:30. Been on a buy signal. When Resorts. Momentum still pushing higher. Okay, that looks good. Wynn Resorts. Okay, Wynn and Las Vegas Sands, those two have been trending. Wynn at the high of the day. All right, Wynn taking some profits off on this one. Okay, big move on Wynn this week. We pulled back to the 21-day, just below it. Took off to the upside on Tuesday on a gap up and following through. Nice volume showing institutions. TGTX looks good. SPY pulling back a little bit more. Lulu turning the corner.
could mean for margins because we know that they can weigh on margins for Tesla, which typically are quite high. He says his analysis shows that Tesla can afford to lower its average selling price by about 8% without denting margins, talking about the ramp up in Berlin and Austin, improving unit costs, also saying the end of shipping from China to Europe will actually improve supply and input costs, and pointing out that Tesla will benefit from some of the EV incentives here in the U.S.
Yeah, so wind looks really good.
That actually seems like it could be positive news and help Tesla achieve that addressable 50% market. So could be why we're seeing a bit of a boost here for Tesla. But as we've said, I mean, it's down 70% over the past year, 71% from its all-time high.
All right, Pinterest still in that big channel, sideways channel. Pinterest, nice little bounce, but still in this channel. Paramount, I really like this one. I really like Paramount. Buyers stepping up. Past 3 days, following through. It's been up for 8 days now. 7 days, looking for a follow through. Nice, Paramount. Okay, Wynn Resorts pushing higher. Wynn. Warner Brothers, nice move on Warner Brothers. Thank you, Ken. Nice move on Warner Brothers, Ken. Looking good. SPY going. NVIDIA, nice bounce here. Starting to come off these lows. NVIDIA. Boeing. So NVIDIA, nice turn. Holding this 140 level. It's got to get above the 50-day. Trying to put in a higher low. Looking for the higher high. RSI turning. MACD's crossing soon. Stochastics oversold and turning. So NVIDIA looks like it could go some. Getting late in the day. It's almost 2 o'clock on the East Coast.
Sales are also a big portion of their sales, and it's a really mixed story.
Billy breaking higher. Billy. That's a nice pop. Billy's popping here. All right, Billy. Baidu, FXI, all of these looking good. FXI, Billy's surging here. There goes Billy. Okay, going for a green close.
Deals with Fox, and these deals are actually up for renewal in 2023. So this is a situation where maybe some bigger player. This is the speculation that Comcast altogether, or even Disney, picks up the brand altogether.
Baidu. What you gonna do? Baidu trying to push a bit higher. Higher lows, higher highs. Huya, HUYA. All these Chinese stocks doing well. Huya pushing higher.
To kind of justify the price action, but I think if you also consider the other sort of canary in the coal mine here for potentially why the price is going higher, not lower, is short interest. The short interest on the stock is as a percent of free float is close to 20%. So I think the drama behind the founder and CEO Vince McMahon really caught the attention of short sellers and potentially valuation concerns, and we may be seeing a partial or the start of a short squeeze here as well. So I'm just bringing this up as a possibility.
McDonald's, low bounce in McDonald's.
Double digits, especially in the last 2 days.
George, I had you pegged as a wrestling guy. I feel like that's going to cost me some money in our friendly wager here. But all jokes aside, George, Vince McMahon.
All right, SPY breaking out.
Exact situation. A particular person and the company that they used to run coming back. There's really not that many examples that you can think of that will have this kind of effect. I mean, this particular guy.
Some selling up there. There's still some supply. Looks like SPY. SPY looks like supply. They keep hitting it up here. It looks like it might run though. SPY just grinding along. We got 2 hours to go.
Yeah, he is. I mean, at the end of the day, he was a full-fledged character in the ongoing operations of the business, and again, he's a founding founder of the business. He's been the CEO of the business for quite some time. Like him or not, or controversy or not, I'm just looking at
387. Pushing through 387. There we go. SPY's going. SPY's going.
Looking at it based upon the EBITDA growth with a multiple around 33 times earnings, with EBITDA growth expected around 15%, even a margin of safety of 30%, puts it still right in line with potentially what it could earn next year. And if you look at the results from analysts with this news, MKM Partners has a $9 price target on the stock, and they maintain a buy rating. Because there's value to be unlocked here, especially if they sell the business, because it is a franchise that is well-known and well-recognized brand, merchandise sales, as well as, again, a full-fledged sports entertainment business. So overall, I can't say what's going to happen, but I can see why the stock is higher this year.
Yeah, and George, a name that's consistently outperformed over the last year. And I wouldn't even go as far as to say he's Bob Iger to Disney. I almost think he's Walt Disney to Disney.
Literally.
Based on, Vince McMahon is WWE to me. So obviously well received by the street today, and perhaps well received that we could see a sale of the company. But we'll leave it there. George Charles, have a wonderful weekend. Thank you for all of your thoughts all week. week
See
long.
you guys. Thanks.
Thanks, George. And that also does it for Alex and myself for Next Gen Investing.
All right, SPY looking for a follow through.
Watch list with this old lady.
All right, let's take a look at SPY on the daily, or S&P on the daily, S&P 500. Daily, nice candle today. We still have resistance overhead at the 50-day. We're at the 100 period moving average, that dotted line right there. 200 day is just overhead. There's the 50-day, 200-day. Good, good. SPY pushing a bit. Let's go for 390.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy. A measured approach.
All right, a little bit higher now.
Driving accuracy.
All right, excellent day. Excellent day on SPY.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere. No download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers.
Nice follow through on SPY. Nice follow through.
As you navigate your investments, don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange.
SPY breaking out above 387.
We're coming to you live from the New York Stock Exchange. Thanks for being with us. It's an update across all four indices that you're seeing, but of course it's been down weeks. We're seeing the S&P and the NASDAQ down, for example, for the fifth negative week in a row. Here's a look at the S&P, 3880 right now, 72 points higher, up 1.9%. The Dow, up 584 points.
All right, so that looks good in this overall downtrend. We're coming back up to test the 50-day and the 200-day potentially. SPY just grinding along. All right, cheesecake at the high of the day. There's a lot of stocks at the high of the day, obviously. I'd be reducing my risk I am reducing my risk into these this pivot high, because what I'd like to do is reassess the markets next week. For example, maybe we get a follow through in materials and mining, or maybe energy continues to push higher, or industrials. I want to focus on those sectors that are hot next week, because I've been spending most of the time in short-term trades, a week at the most, with the exception of Boeing, of course. But even with Boeing, taking profits towards the end of the week and then reassess on Monday or Tuesday, this seems to be a good strategy lately.
Let's go right now and continue our show and take a look at the big picture. Matt Miskin's with us, co-chief investment strategist at John Hancock Investment Management. Today we got the jobs report, and I said that at the top of the show. Obviously, the big top story today, the wage growth story within it shows inflation is coming off the highs. That's one thing people are talking about. What stood out to you? Tell me more.
I think you're right, Nicole. I think the wage growth dampening here into the final month of the year was the best sign of the jobs report. I think the overall number was okay, not bad, not great.
It's probably still on a buy signal. The daily pushing through pivot highs from last week and the previous week. 13 days below the 50-day moving average.
It was around 10 a.m. where things got interesting, and we could certainly talk about that.
Yeah, and we've gotten in the ISM print and some other things. I mean, we saw that under 50, and I think that was a crucial part of it as well. But just the fact that the markets have managed to turn around in a big way on this Friday tells us a story as well. What else are you watching?
Yeah, I mean, today overall, you can make up your own narrative on what's happening because almost everything's up. I mean, other than the dollar. The dollar got whacked today at 10 a.m. with that weak ISM report that you were talking about, Nicole. And as soon as that happened, dollar down, risk assets up. We saw U.S. stocks, non-U.S. stocks. You saw bonds rally. But it's really interesting right now because you're seeing all sides of the spectrum really rallying, from higher risk assets like materials are leading.
All right, SPY still going.
Today, they're up about 3%, and then you've got treasury bonds rallying today. Treasuries and materials are two very inverse. Correlated assets over time. Materials are playing real, the economy.
Dollar at new lows here for the day, 103.90. Dollar dropping off more.
Materials, on the other hand, and quickly looking at the China reopening story, it's still playing that narrative.
Nice follow through in SPY. Pushing higher.
Do you think that the Fed may start to step off the gas? Because we'll have obviously a rate hike probably on February 1st, but then what?
Yeah, we think that one more in March very well could happen here because of this jobs report and because the labor market just hasn't shown much signs of weakness. But after that, we think that they're going to be on pause, and that actually they're going to be cutting more aggressively in the back half of 2023. Right now, the bond market is pricing in about one rate cut of 25 basis points. I mean, if you look at the ISM services data now, the manufacturing data, the housing data, you look at a lot of the leading economic indicators, the yield curve.
Netflix still going.
Telling you the same story that a recession is likely happening in the midpoint of this year, and yet the bond market, in terms of the pricing in of rate cuts, hasn't really reacted to that too much yet. So we think that's going to be a big development. That is going to help bonds rally, actually, in the back half, high-quality bonds, that is. And that's one of the biggest allocations or views that we have in terms of our outlook.
Netflix going. SPY looking really strong here. SPY.
Performers here in 2023 after a really tough 2022.
SPY ripping. Don't forget to take some profits off into strength. We'll reassess the markets next week. And we'll focus on the strongest groups. SPY still going here. Wow, look at this move. Look at this move in the day. Holy smokes.
We stay disciplined and say, look, it's telling you that the Fed funds rate and the Fed are acting very restrictive relative to what the market is pricing in growth and inflation in the 10-year longer term bonds. And if anything, the data continues to stay.
Very nice follow through.
Weakening inflation based on this wage data, and the Fed is still hawkish coming into this. And so that is why the yield curve is inverted. We still think it's a very relevant.
Futures looks good on the shorter time frames, 5 minute, 15, 60. All on the buy signals. Tick cumulative is green. We're trading 5-to-1 up volume, 5.5-to-1 on the NYSE, 2.5-to-1 on the NASDAQ.
It's hard. It's a really narrow path, and we think it's probably unlikely. I'd rather position for a more of a hard landing than a soft landing here. And I think it's interesting because the markets are not pricing this in. Industrial sector is crushing it right now. It's had an amazing run. Materials, energy, financials. Financials are coming out of the gate so strong into 2023 here, and the markets are not pricing in a recession. In that view, if you look at the equity intra-market positioning and in essence performance, we would actually look for higher quality, more defensive opportunities in portfolios, whether that's healthcare, parts of the technology sector, even some utilities. If you're going to play value, we'd have quality value there, but it's to us, it's still a choppy ride as we get through this recession. We like fixed income and income more broadly, and you got to be selective in the equity market.
Yeah, without a doubt. So where do you find value? You want to be selective. You said, how do you find the value? What would signify value today to you?
Yeah, we do look at healthcare as our top idea.
388 next.
It's trading relatively cheap. It's defensive. And the ROE or the quality element to it is pretty strong. So the margins are decent. Return on equity is good. So that's kind of the sweet spot for us. And then in terms of some of the value, we'd also look at dividend payers. Energy had a tremendous run. It was the best place to be in value in 2022. We're more neutral on it here, but looking for more defensive ideas within value. Yeah, I think staples look a little expensive here to us, but healthcare would be our top idea.
Yeah, Cayman, I have the 388 call or SPY.
Yeah, so I mean, there's a China reopening trade, which has been nonstop. It's been relentless. Every night, I go to bed and I wake up in the morning and there's a new headline saying China's reopening, China's reopening. And commodities in terms of the industrial commodities like copper have been on fire as a result. Some of the copper producers, miners have been rallying really hard here on this. And we're more reluctant to fully put that exposure on in terms of our views, because if we're going into a recession, that's going to overwhelm that China reopening narrative. And the U.S. has never gone in a recession and not taken the global economy with it. I think that's a really important thing to consider here. If the U.S. goes into a recession, it's very likely it's a global recession. There's been periods where the U.S. has managed to not go into a recession when the rest of the world did, but it's never been inverse, where the U.S. went into a recession, the rest of the world didn't. And so I would be, in our view, is we would actually be less exposed to that commodity trade, but it has been on fire in terms of the stocks over the last 3 or 4 months. We would trim some of that strength, that recent relative strength, and put it in more defensive equities.
Right, understood. Matt, it's great to see you. Matt Miskin, thank you very much. Happy New Year. John Hancock Investment Management. Thank you, Matt. Later Later this hour, we are ready to focus on the utility sector. What can we expect from utility stocks for 2023? We have that detailed for you. And how about space? Space sector, we're looking at what's on the horizon there and how it all fits into a global economy. And our panel is ready to talk about all things in that jobs report and what it could mean for the Fed going forward. Up next, take a look at some potential opportunities in the first half of the year.
Take the opportunity to exit some risk into strength. We'll reassess next week. If we get a follow through and we push to the 50-day, likely at this rate, then we'll reassess the markets, look at what is strongest, and trade accordingly.
Let's walk through charts. One of the most commonly used features on Conversely. Start by going to the Charts tab and entering a ticker symbol. Select time frame to adjust time intervals or to favorite a time frame.
More follow through.
To change the appearance of the chart. You can add drawings by selecting drawings, drawing tools, and then type of drawing. For simple comparisons, select studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
Nice pusher here. SPY continues to push.
When traders tell us how to make thinkorswim even better, we listen. Because platforms this innovative are just made for traders. They're made by them. Thinkorswim Trading from TD Ameritrade. It's a 13-hour flight. That's not a weekend trip. 15 minutes. We downloaded the TD Ameritrade mobile app so you can quickly check the markets.
Actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk position.
You two are all set. Have a great flight. Thanks. We'll see ya.
Wow, nice move on SPY here. Nice move on SPY.
Fits your investing style.
Very nice. Whoa, look at that. Nice job there.
Hi, Tick Alert plus 800.
Nice job there, Stephen. Nice job. All right, SPY going some more. Holy smokes. Look at this move here. Wow. Wow, look at this move.
Then we'll take a deep dive into the assets commonly held in income portfolios, dividend stocks, bonds, equity REITs, and cash. We'll also learn about routines for
Nice volume here, pushing through.
along the way. You'll watch
Make sure you're taking some profits off into strength. We're coming up against major resistance levels.
So if you're looking for an edge, consider your education. Head to the education tab on Thinkorswim for investing course and a whole lot more.
All right. Very nice. Very nice move here. Oy, oy, oy.
We have some movers for you to take a look at. Lululemon. Lululemon is higher today after Wells Fargo upgrading the stock to overweight, boosting the price target to $380 from $360. The analysts a little cautious, though, saying sees a very challenging path heading into 2023. First Solar higher today after an upgrade over at Wells Fargo. The stock was boosted to overweight from equal weight, raising the price target there to 188 from 146. The analysts there turning positive on the clean energy sector for 2023.
Holy smokes. Look at this move. Blasting higher. Very nice. Very, very nice. Okay, a good way to end the week. On an upswing. On a positive note. Good way to end the week. Very nice move. NVIDIA is still going. NVIDIA. All right. Please take some profits off into strength. We'll probably follow through next week, provided we close strong near these higher levels. FXI looking for a retest of the high of the day. Baidu going for the high of the day.
So far, Nicole, every rally we've had so far has been a bear market rally. And no markets really ever bottomed before the recession happened. So with the street expecting that recession to happen mid-year 2023, which means this summer, everyone's just kind of buying the dips and selling the rips. And that's just the environment that we've been in since January of last year.
Right, so that's the whole thing is that, they buy the dips, sell the rips, so bear market rallies. And when does that theme change? Are there too many headwinds for stocks to really take off?
Well, I haven't got the invitation in the mail yet that the Fed is lowering rates or they're topping rates off. But I think the mood of the markets will change dramatically. And I think what investors have to remember is that the greatest bull market in history from 82 to 2000, we had rates.
All right. Hopefully you're taking some profits off into strength.
Really is going to be the new normal for the next couple of years. I see the Fed topping off rates here shortly within the next 30 to 90 days. And when that happens,
Wow, very nice move in SPY. Thank you very much.
that same technology sector exploded when rates were still at 7.5, 8, even 9 or 10% during the 90s. And so that's a temporary reprieve for now, but it's a gift to the investors. That's a gift to the financial advisors that can reposition assets and dollar cost average very slowly into tech over the next 3 to 6 months.
Which tech, which names, and why?
Well, that's a great question. So obviously, I love the ones that have been beaten up the most, but they're the perennials in their space. I mean, they're the best of the best. And so I'm going to go offshore for the first one because it's been beaten up the most, but that's Alibaba. I think everyone's going to have a portion of that. Even Warren Buffett's got some Alibaba in their portfolio. You can buy it at an IPO price of 2014 today. And with the reopening, and hopefully the virus over there will sustain itself and eventually get herd immunity like we have here in the United States, there won't be mutation involved, that stock will definitely reap the rewards. I also like Meta as well. They're down 66% from their peak. We know all the reasons why they're beaten up. Will virtual reality become a reality? I'm not sure yet. Probably not, at least in the short term. However, all they've got to do is make a couple of nice moves on their balance sheet, reduce their expenses, and their profit goes way up. And so they're trading at a multiple of 11 times earnings. Who would have thought that's ever possible for such a cash flow rich business as Meta/Facebook? I also like Microsoft, which is down 31%. And of course, Apple. And if you notice, I'm staying in best of breed, but these are gift oriented prices for folks for us to start reinvesting before that rate hike or that rate stifling occurs. And the Fed says, maybe.
All right, take some off into strength.
We're going to change course here. And so they may not raise rates anymore, they just stifle rates. These stocks will pop when that happens.
Yeah, so Baba, Meta, Microsoft, and Apple. And with Microsoft, I mean, that has been a clear winner, really did well over the last year or so compared to some of the other names. Meta, people are wondering about the metaverse and whether or not Zuckerberg just put too much there, whether he'll change his tune a little bit. With Apple, the products and whether or not one concern that I read today was the hardware replacement cycles that could be extended, and that may not be a good thing. And maybe regulatory scrutiny, that could be another thing. So there could be some headwinds for some of these names, right?
There's still headwinds for these names. There's still headwinds for the market. We're in a non-growing environment where earnings aren't going to grow. The number one driver for earnings is what? The market to go up, the stocks to go up is earnings. And earnings, profit, net profits, the bottom line has got to increase. If it doesn't go up, and so now we're going to be in that environment probably for the next 12 to 18 months. So this is not something that you buy and hold for a 12-month time frame. It's something you're going to have to hold for at least the next 3 to 4 years because
Nice follow through. All right, take some profits off into strength.
When the interest of the debt then becomes a much larger line item budget,
market, and we see then the Fed being forced to lower rates regardless of where the environment is.
Yeah, and I know you don't like small caps, emerging markets, and consumer discretionary, and you don't even have to explain why. I mean, I think the list is very helpful to know what you don't like. But I'm also wondering, just about the big picture of the market, do you see some new lows? Do you see a lot of choppiness and volatility?
There's no doubt we see a lot of choppiness, we see more volatility. The market is not bottomed yet. We have good days and bad days. The catalyst for the market to go south are further earnings revisions to the negative. The consensus I think we're going to see this year is revisions from -2 from last year for this year to -5 in terms of the lack of earnings growth, -5% reduction year over year. If that number gets larger, then of course the market will respond in kind, unfortunately, in that sense. And so we need earnings to turn around here, Nicole. That's the number one common denominator that will drive this market forward. But for now, we're stuck in a mode of non-growth until the Fed either pauses or decides to re-stimulate. But they won't do that until the economy actually physically starts to go through some difficult times. And we see unemployment factor maybe back up over 4.8 to 5.2. Once we see unemployment up that high, then we see the Fed re-stimulating.
Yeah, and with the earnings, the expectations, as you said, to have these turn around and see better days. But really, the earnings expectations are really being questioned, that they are still way too optimistic at this point. Jeffrey Small, nice to see you. Happy New Year, President of Arbor Financial. Thank you.
Thank you.
Coming up next, we're ready to check on the utility sector. In fact, every sector is higher today. But what is it about utilities that we can expect from this space in 2023? And a few stocks you might want to keep an eye on.
Okay, profit taking, take some profits off.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our active trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcast and start learning today.
COSM going. COSM is going. COSM.
I'm Nicole Kennedy, live from the New York Stock Exchange every single market day, from the opening to closing bell. Tune in to the TD Ameritrade Network.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack, we wanted a streamlined version we can access anywhere, no download necessary. And Kim, she wanted to execute a preset trade strategy in seconds. So we gave them Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD.
Baidu trying to get back up to the high of the day. Baidu, SPY, just a little bit of profit taking. Still looking like it might follow through.
Take control of your financial future. Next Step Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. With options for volatility course, we explore what implied volatility is and how it could potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish. So looking beyond direction to consider the impact of implied volatility can help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the education tab on Thinkorswim for the full options for volatility course and a whole lot more.
we want to focus on one right now, and that is the utility sector. Jay Raves with us, CEO of FryDay Asset Management, and I'm happy you're with us, so you can tell us all about why utilities could be the outperformer in 2023. Tell us a little bit about it.
Very, yeah, and thanks for having me, Nicole. Yeah, it's coming off last year, utilities had a very strong performance year. They ended the year up a little bit, but about 15% better than bonds, and about 20% better than the S&P 500. And while you probably can't expect that kind of outperformance again this year, I think a lot of the same market conditions that existed last year that led to the outperformance still exist today. And I think about your previous guest talked about earnings growth and the lack of earnings growth. I think your average utility is going to be able to grow 5 to 6%, both earnings and dividends this year. And I think investors can have a lot of confidence in that growth, and that stands in stark contrast to the rest of the market. So, I think within that context of a certain economic outlook, a Fed that is still struggling to contain inflation, and the possibility of recession, kind of the steady, reliable earnings growth that you can get from the utility sector makes a lot of sense in people's portfolios.
I feel like you're reaching when you say mid to high single digit earnings. Is that a reach, or you think that's pretty likely?
No, I think that's pretty likely.
Billy, all the Chinese stocks doing well. FXI trying to get back up to the highs that we saw at 1135, 1140. SPY at the highs. Market net flow is very green.
It's going to cause a significant amount of investment, a lot of growth opportunity, and all that's been accelerated by a lot of the tax credits that have been passed as part of the Inflation Reduction Act last year. The worry over the last couple months was on bill pressure and how customers would pay for all that, especially with rising power prices and rising natural gas prices. The benefit of looking at utilities today is that natural gas has fallen off a cliff over the last couple of weeks. Just back in August, natural gas at Henry Hub was over $10. Today it's below $4. And so this worry on customer bills has kind of gone away. And now I think investors can really take a look at the long-term upside of the sector.
Yeah, you said that falling commodity prices could allow this group to really see the spending, and they will be the beneficiaries of this. How about the dividends, which that's another attractive part of this group, but you see growth there too. Is that a reach?
No, dividends for most companies should be pretty tied with earnings growth. Most payout ratios are fairly stable, so utilities generally set them to the same level as earnings growth in any given year. That can run into some issues when power prices are high, when natural gas prices are high. But generally, those worries have been resolved over the last couple of weeks, and you shouldn't expect anything different from dividend growth going forward.
Right. And at this point now, where's the negative or the headwinds?
Well, the negatives are primarily that utilities outperformed by so much last year. And it's not necessarily that utility growth isn't going to happen. Utility earnings are going to go up. It's more of how relatively attractive that is in the market. I think let's assume that we get clarity on the economy, inflation gets under control, people start buying some of these names that are down 20, 30, 40% over the last several months. That's kind of the relative downside risk for utilities. It's not necessarily that the company fundamentals are going to go poorly. It's it's kind of how that fits in relative to the rest of the market. And so it depends on, in a way, how bearish you are on the rest of the market.
Right, and I know you're not able to pick specific names, but you have LNP, you have Nextera, and a few of the other names, Constellation, for example. Would these be examples of some of the names that you think and are representative of what we're talking about here?
SPY breaking out.
I think those three names in particular can benefit from the Inflation Reduction Act. NextEra Energy, the utility they operate in Florida is one of the best in the country.
SPY's still going, looking really good.
Is the largest supplier of wind and solar generation in the United States. Certainly, there's a lot of incentive for utilities and other companies really to build as much renewable energy as possible. NextEra stands to benefit from that increased demand. Alliant is situated in the Midwest, which in really great wind resource, and they're going to be able to use these tax credits that are available in the Inflation.
Wow, look at this market. This is great. This is good stuff.
Wind generation and their solar generation for that matter. They can also add batteries to existing systems and utilize them in different and more reliable ways. So a lot of opportunity.
Unbelievable. This is a great move here on SPY. Make sure you're taking some profits off in other positions.
It's a nuclear power producer. And the Inflation Reduction Act basically set a floor for the prices nuclear power providers could get in a way to make sure that we kept nuclear power plants open.
HKD back down to the lows of the day. HKD.
And I think what that means is, before the IRA, Constellation was more of a volatile commodity-based play. To now, it's a little bit more like a long-term contracted asset, and then that just gets a different valuation than something that's purely commodity related.
There was some concern. You mentioned the Inflation Reduction Act, and in some ways it could be very helpful, but also there was some concerns by legislators, regulators about the rising bills, and I wondered how that could factor in. But I see your big picture, Jay, and appreciate your time today. Jay Rain, CEO of Reeves Asset Management. Thank you. Still ahead in the second half of our show, let's head to space. Let's check out what we can expect this year from space exploration and rockets and whatever else we need to know, and maybe some of the headwinds that could face the industry as well. We had a break to take a look at some winners and losers in the S&P 500, which is now up 2.2% and higher for the week.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach.
All right.
Learning at its finest.
I mean, this could keep going. Obviously, I'll reassess it next week, but I'd be taking some profits off into strength, depending on what your strategy is. If you plan on swinging, I'm not going to tell you what to do. I would never do that. I'm just taking profits off into strength. I can't tell you how many times when I was a younger trader, I'd have my accounts were up big on the week, and I'd swing everything. And especially nowadays with the markets in this bearish trend since January last year, you'd be up for the week, and then the next week you'd be down, 10, 15% because you decided to swing into the weekend, into the next week. Obviously, there's a lot of variables to that statement, but just generally speaking, you're up big on a week and you get greedy and you swing everything, and next week you're down. I just like to take profits off into strength. When the market starts trending again in a bullish direction, it'll be a different story. Right now, we're still dealing with that chop. Very nice looking day today. We have, it's 13th day. 1, 2, 3, 4, 5, 6, 7, 8, 9, 11, 12, 13, day 14 below the. All right, we're at the 50 day right now. SPY tagging the 50 day. SPY's tagging the 50 day. Wow. Wow, I was right.
For the fifth week in a row, the S&P and Nasdaq were down, but not so anymore. Not with this move today, because you have the S&P, Nasdaq, and Dow all higher for the week, based on what we're seeing here today after we saw that wage print. I mean, I think that really was the turnaround here. The Dow 33,605, up 675 points, up 2%. The S&P is up 2.2%, 3892. The Nasdaq up 2.6%, 11,026. And the Russell. Look at that. It's not every day that we see all of these up more than 2%. And every single sector higher. And that's why we have an important market update looking at some key numbers. Then Liechtenstein, for instance, now.
Look at this freaking market. I'm about to curse here. Jesus. Tesla. Yeah, looking good on Tesla. Nice move. 113.74. Nice move on Tesla.
Cheering on the numbers that we saw this morning. For the most part, the bulls are enthusiastic about the jobs report, which showed weaker than expected wage growth, and the ISM data this morning, which showed that the economy is slowing a little bit. We saw the SPX rally up to 3894. We've got the Russell up to 1793. The Dow, last I looked, to 33,614 after the weaker than expected data. But I did notice the NASDAQ, Nicole, 300 some odd points off the lows for the day. And with all three of the major indices, except for the NASDAQ, posting new highs for the week, I was a bit surprised to see the tech heavy units lagging a bit. It got up to 11,042 today. But earlier in the week, we were up around 11,093.
Tesla. Wow. Tesla. Nice.
But just pointing out that it's a little bit reluctant to participate to the upside relative to the other three majors. But Nicole, it seems like you brought this bid activity back.
I got a massive headache. Oh.
Tuesday, Wednesday instead, and probably going to get a little bit upset next time that they hear that you're taking some time off.
All right, take some profits off. We're starting to hear some profit taking now. Profit taking at the 50 day. I would anticipate that.
Interesting week for the dollar and for rates, but with the indices rallying, you expect to see the dollar coming off, and it has. And
okay, so let me go check the watch list. And the IBD 50. IBD 50 having a lot of success here. CPRX, that's one that Frano likes to trade. Mobileye. Nice bounce on Mobileye.
We ended up last week around 3.9, and I'm keeping a close eye on this move lower here in rates that we're seeing today this week, because if we continue lower, the D slow is around 3.4.
All right, starting to see some profit taking. All right, so these look pretty good.
High, which is up, the D's high that is up around 4,100. So let's keep an eye on those levels right now in terms of the next big hurdles. Again, 10-year yields to the downside to get below 3.4.
Some winners, some losers. 9 for the week. That pulled back. But it's still a very bullish trend. Boeing having the biggest move.
Yeah, and I can't believe we'll start earnings again, and then we'll have the Fed. It's going to be busy. Ben Lichtenstein, good to see you. Thank you very much. partner, Space Capital. Tell us, 2023, what are you excited about in the space industry?
Sure. I mean, quick recap of how we got here. It's been a tough year for space stocks, but a big year for innovation. 2022 was really a tale of
Caterpillar having a good day.
Russian invasion of Ukraine really showcased the
Big move. You see Caterpillar there? Caterpillar.
SpaceX's Starlink kept Ukraine connected to combat Russian misinformation. Earth imaging companies provided essential
You still in that there, Prism?
information to enterprise and government customers who are willing to pay. So we saw the National Reconnaissance Office, one of the big five U.S. intelligence agencies, make their largest ever purchase order for Earth images in Q2. And we've seen record revenues for Earth observation companies, which really demonstrates how the segments of the space economy are counter-cyclical.
All right, Taiwan Semi, TSM. Okay, very nice setup. Very nice setup on TSM, Taiwan Semi.
Traded company. How important is this one, and do we watch the Boeing stock along with it?
Really struggled to deliver.
Nice trade. Looking for a test of the 200-day. That seems doable. Taiwan Semi.
Several years ago, made an investment into two companies to deliver NASA astronauts back to the space station. One was the Boeing, which was the safe bet, and they got essentially $4 billion in contract to service the space station. SpaceX got a couple of $1 billion to do the same thing.
Let's see.
That they could deliver for NASA.
Semiconductors.
To deliver their astronauts to the space station.
Taiwan Semi. TSM.
SpaceX has been delivering several crews to the space station, and Boeing has still not, successfully taken their demonstration mission to the space station. So, expectations are pretty low on Boeing's ability to deliver, but we'll have to see how it plays out. It certainly would be great to see some competition with regards to crewed missions, as well as launching satellites. And on the bright side, we've got several new launch vehicles that we expect to come online this year to give SpaceX a bit more competition on cargo to orbit.
Yeah, and we think about all these millionaires, SpaceX, Blue Origin, Virgin Galactic, and there are ways to invest in this as well. But are they, we look at what they're doing here for the new year. You mentioned SpaceX. Tell me a little bit more about the picture. And maybe, I don't know if you can suggest any ways that people can sort of also look at ways to get in and also benefit.
Sure. I mean, we're still very early in this development of the space and market. I mean, humanity's been operating in space for decades. We've been sending satellites to orbit and people to orbit for decades now, but it's really only recently become a category for investment when SpaceX entered the market, reduced the barriers and the cost of getting to orbit, and published their pricing and brought transparency to the market. They did that about 10 years ago, but things really only started to pick up.
Hi, took alert plus 800.
7-8 years.
Taiwan Semi breaking higher.
The SPAC boom really sort of accelerated things and prematurely brought some of these companies to the public markets. A lot of these were pre-revenue, and some of them were even pre-product. Virgin Galactic, for example, is still pre-product. And so, it's tough to say that those companies were ready for prime time and were ready for the public markets, and their stocks really taken a hit. But there are some really interesting things developing, a lot of really interesting fundamental companies that have become critical national infrastructure on the comm side, on the intelligence side. you name it. There's a lot of government contracts that are helping a lot of these companies be recession-proof and actually grow their revenues significantly in this market. And some of those companies are going to be ready to go public in the next couple of years when we might see the IPO market start to advance.
Yeah, Taiwan Semi, great setup there, Susie. Thanks for sharing earlier. I saw that earlier. Taiwan Semi, nice setup going into next week. We'll probably see about 2 or 3 points next week, I would think. Taiwan Semiconductor. This thing just keeps going. Looks good. Taiwan Semi. Spot. Look at this crazy market. Holy smokes. Gotten a lot more out of this than I anticipated.
Inspiration 4 was one of those, and the commander of that mission, fully privately chartered mission, is now chartered another mission in 2023, and so we might see that happen on Starship.
I see. Okay, thanks for that explanation. And the truth is, we started out the conversation and we were talking about Russia, Ukraine, and how
Hi, took alert plus 800.
back and satellite service, and we see that when we have natural disasters and how helpful working in space can be. I mean, there's also our national security, and another way, that is so incredibly important. Chad, I love our conversations. Thank you very much, Chad Anderson, Managing Partner at Space Capital. Thank you, Chad. Still ahead, we'll bring in our panel ready to talk all about that jobs report today. So we saw a strong number. Now what? The labor market in focus, what the Fed may or may not do going forward. Watch us, please, right back.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, we'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the income investing course and a whole lot more.
Binge watch the market with TD Ameritrade Network. The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy. Tune in 24 hours a day, 7 days a week on TDAmeritradeNetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
Empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment.
Lots of stocks moving. Good job. SPY at the highs. Yikes. Continues to move higher.
Welcome back to the watch list. It's time for a panel to talk all about that jobs report. Sam Burns is with us, founder and chief strategist at Mill Street Research, and Stephen Milano, managing director of investments at Integrated Partners. Thank you both for being here. We saw the jobs added. We saw the labor force participation rate ticking a little higher. I mean, there were some really good things, even, wages. This is the part that people are talking about. Not as hot, and the prior month was revised down. So, Sam.
Okay, a little more profit taking.
I think that this report was again mixed. So if you're a hawk or a dove, you could probably find something that you want to see in the data. But I think the overall message is that there's still a slowing in the earlier high rate of growth in the labor market, and that the aggregate incomes that are generated by the number of people working, their wages and their hours has slowed significantly as well. I think they're starting to get back into the range that the Fed is a little more comfortable with, would be considered non-inflationary over the last, say, 6 months or so. So I think it's generally a supportive report in the sense that it's not terrible economically, but slowing to the point where the Fed might have room to pause the rate hikes in another month or so.
Yeah, I saw the average work week 34.3. That came down. And so with the year over year now for wage growth at 4.6, that's a low point, or at least recently since 2021. So, Stephen, what do you say about what we've seen in this report, and what do you think happens going forward?
Yeah, I think you pointed out the most important aspect of the report, which was wage growth at 4.6%. If you told me at the beginning of this week, I think we've seen a narrative change, but I think if you told me at the beginning of this week that we were going to see a jobs report that had 23,000 jobs more than expected and an unemployment rate that dropped 2 percentage points to 3.5% from 3.7.
Yeah, Taiwan Semiconductor's trading at a discount to operating earnings. It's like 12 times right now versus 15.4 normally. Taiwan's also trading at a discount to EBITDA and sales. It is a little bit of a premium to cash flow. Not surprising, with all the plants and the things that they're doing. All the considering the building that's going on, and they're still trading at a discount and have good prospectus to continue making cash. The technicals also look good on Taiwan Semiconductor.
So actually, my base case would be that the Fed continues to hike and probably price another 50 basis points so that they know that their credibility is intact, and then to see what that employment data comes out with. But that's the tough part, is someone will have a void of employment data between now and the next Fed meeting.
And could they pivot to rate cuts, Stephen?
If there is a rate cut, I think it's going to have to be supported by data, and it probably wouldn't come until at least the first half of 2023. I think right now, when you look at where GDP growth is, I think you look at the Atlanta Fed, the GDP now forecast.
Okay, SPY. Oh, this is relentless. You can tell when the institutions come in. The old idea that after 2 o'clock, what they do tells you a lot yesterday compared to today. All right, so beautiful. Continue to push higher. Beautiful.
We're talking about that we could be going either way in this mixed picture, right?
McDonald's just ripping it higher. McDonald's. Bank of America, the bank's looking good. Intel, continuation back towards 30. Intel.
So it's hard to pin down, and particularly right now, where the labor market really is, and exactly how strong or weak this momentum is right now. A 3.5% unemployment rate looks very, very strong, but if you look at the overall growth rate of jobs in either survey, and the wages and the other measures like hourly.
Hi, Tip Alert plus 800.
A much more moderate picture, I think. And I think after you have at least 2 reports before the Fed meeting in March, then you could probably get enough data that would support a pause by that point, or maybe the final rate hike in March. So I think by the time you get 2 more months of inflation and jobs data by late March, you probably have a stronger case for a pause.
Yeah, and there's just other things that I continue to watch with the labor force participation rate showed some good news, though my expectations for that are somewhat muted at this point based on the birth rate and the baby boomers and all that. There's other things like fake jobs, are those 10.5 million jobs being posted really jobs that can be taken or, acquired somehow? What else do you think about here when you take a look at this, Stephen?
one, which is job openings and labor turnover survey. Not only reopening for early quits, so every indication of the under.
All right, there it goes. There they go.
Extreme high took alert.
Very nice trade today.
Going forward, we're actually starting to focus more on the underlying strength of the low-end consumer. So the other thing that came out in the FOMC minutes related to labor, but also credit conditions, was some of the growth that we're seeing in consumer credit, in particular some of the lending standards and whatnot in the low-end consumer. And as we talked about growth starting to slow, one of the things we're watching closely is how much or how slow does that low-end consumer get, so that the incremental catalyst to economic growth maintains itself, and so that we don't have a slowdown in growth more than expected. That's part of one of the key areas, is just the low-end consumer right now. Given we're seeing interest rates on credit cards more increase, we're seeing interest rates on car loans increase, we're seeing consumer credit start to accelerate, especially at the low end. And we see the personal savings rate down to 2.4%. Those are all signs the low-end consumer is starting to to get stretched.
Extreme high took alert.
Toronto, market on close.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. The platform demo webcast series is designed to help you broaden your knowledge of tools and resources available from TD Ameritrade. You'll learn tips and tricks to help navigate TDAmeritrade.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest.
All right.
Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that
All right, SPY, looking good. We got an hour to go, less than an hour to go.
Personalized education to expand your perspective, and a dedicated trade desk of expert level support that will push you to be even better, and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell-ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trade 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
Hope everyone's having a good day. I've got a really bad headache. My apology for being so quiet, but a really bad headache today. I think it was that port I drank last night. Paramount at the highs of the session. Looking for a follow through next week.
Even Tesla is up 3% today. Apple's up just shy of 4%. Alphabet, a little bit of a laggard, but all your big tech stuff generally working. Tech as a sector is up 3.2% right now. Second only to materials stocks as the leader on the day. All right, so on a 4-day week. We got 2 down days and we got 2 up days. So is it a tie? I think still probably. Let's see how we close. But it might be a little bit of a marginal victory here. We're fighting for the high right now of 11,150 for the NASDAQ. That is after we fought.
Very nice follow through today.
So we bounced off the low of the bear market around 10,750 for the NASDAQ. I'm watching the NASDAQ the most. I do think it still is the most important. S&P and the Dow, you've got a lot more space between where they're trading and the lows.
Looking good. All of you in the trading room doing a great job. Doing a great job. Thanks for all the shares in the room.
Bitcoin might be moving, but it just doesn't really move anymore. Bitcoin's basically been moribund for weeks, comatose. It kind of just goes sideways until it makes big moves. Over the last year, those moves have been lower. So if we don't get a big rip here, then I think coiners are going to be finding out that maybe they don't partake in as much upside when stocks are up. They've got all their own coin issues going on. But don't want to get too carried away with it just yet. It's hard to know really how to cast this week when you go from lows of the week to the highs of the week. Still think probably the tiny edge for anti-bears. All right. Let's come back to the house, see how it closes up. The dollar's down today. Watching the relationship between bonds and the dollar come back today is interesting. Today caught a little bit like last year. Stocks and bonds moving in the same direction. You had a pretty bad ISM services print after a pretty good employment print. So that's what I'm saying. It's just a tough day to really figure out how to describe it. Did we rally because of the good employment print this morning? Well, we started to, and then we faded, and the NASDAQ was about to go red. Maybe it was just nervous about the next batch of data with factory orders. And
This relentless move in SPYs is crushing the remaining shorts. VIX continues to drop off, 2117.
Trying to keep a little bit of order in the quarter here and not get too pumped up. Unless, of course, we come back next week and we're talking bigger gains and breakouts and we separate further from the lows of the NASDAQ on the year. But right now, everything here is happening still at pretty low levels. So back to the dollar and bonds coming together again. That's where today kind of looks like 2022, where you've got the bond market rallying, you've got the dollar down and stocks liking it. Over the last couple of weeks, that hasn't really been the case because you've had yields remaining somewhat elevated near the high end, or at least closer to the high end of their range of the dollar. We've spent a lot of time talking about this. The dollar generally has been pretty soft. Yields fairly range bound, and stocks falling. So the relationships got a little bit mixed up, and today they came back together in a very pronounced way. So if we still do have that good is bad, bad is good regime as the primary driving force for markets, then things might be a little bit more predictable because at least then it's easy to figure out.
All right, so looking pretty good. Market's looking very nice.
You told me ISM was going to bomb 3-4 months ago. Would have said, yeah, stocks are going to have a huge day because we've had a year where bad data was always met with a good response for stocks. But then the last several weeks, that hasn't happened. Stocks have been down even as the dollar was lower, even as the yields were down. We almost broke the new lows in the NASDAQ despite drops in the dollar yields and some pretty soft data. So at this point, what's going to be the relationship for this year? Really, really important. Probably nothing more important because even if the direction of assets doesn't go the way you want, if the relationships are reliable and they hold and they're tradable, So today is very much back to last year's regime. Bad data for ISM, good for stocks, dollar down, sticks with rates down, yields down, and then the stock market up. Fairly new and important is the break higher in gold. Because as we get a lot of chop in stocks and some uncertainty in the macros, there are two charts that I'll end on here that do offer a little bit of trend and a little bit of reliability. First one's gold. So gold's been having some really good days over the last several weeks, regardless really what the dollar does. Generally, gold does best when stocks are down, but then today, gold does great when stocks are up. So gold is looking like it's really on a move here. And then China stocks, too, seem to be doing their own thing. So gold kind of seems like it's in this win-win right now, where gold was doing well while stocks were down. Gold's doing well when stocks are up. Gold had some days that it was doing great even as the dollar was higher. And then China stocks tied to their own specific economic situation seem to be carving their own specific path too. So that's our, I think we can say with some conviction, we have at least a short-term trend that's fairly reliable. Gold and Chinese stocks trending higher. As far as the rest of the stuff goes, it looks like a bad is good day. Let's see what Kevin Hanks thinks, and then we'll circle back and out. See if we got any answers. What's up, Kev? Credit to you. When the employment printout came out this morning, he said, look, this is probably pretty good for stocks. But then things got complicated because we started to fade, but then ISM hit and we ripped. So, like, what's the causality here today? What do you think happened?
Oliver, I wouldn't get caught up in that early fade of the gap opening that we saw this morning. That's just trading, right? That's just the obvious fade of a gap opening. Okay. But I thought, that sell-off, how deep it was, and did it firm up?
SPY relentless on the upside.
That is the ebb and flow of a daily trade. You're going to see there's never a smooth line. So that didn't surprise me. But what I did talk to you about this morning was the tone change. Right? There was a black cloud over this market of worried about earnings, worried about inflation, and suddenly we get something that shows a strong economy and weakening inflation. Now, that's today's number, Oliver, but because you and I talk about this a lot, we're going to get headlines over the weekend.
High took alert plus 800.
At or near this level, it's going to be a really good headline-driven weekend for the stock market. So that should help.
Remember SPXU, QID, RWM, all of those, with the markets moving higher, and it looks like we're going to move through the 50-day, I'll be reducing my hedges.
I can embrace a lower U.S. dollar and stronger gold. A couple days ago, when the dollar was up and gold was up, that was a head-scratching trade. This, a trader can make much more sense of with the lower dollar. And if you think of the range today in the dollar, Oliver, it hit 105.5 early this morning pre-open. This is a big sell-off in the U.S. dollar. Yields, you've got them significantly lower. This is a really good day for stocks and the stock market in general. Now, how long does it last? Is it a fair market rally? Well, that'll play out over the next couple of days. But right now, all 11 sectors of the S&P 500 up on the day, Oliver, led by information technology and materials, both up almost 3.5%. Big day, all 11 sectors higher.
Yeah, and the breadth, single stock basis too, just like the sectors you mentioned. It's a big rally. You had Tesla up 4% alongside. It took all day, but it finally got there. So at least that stock can participate. And when we do get these broad rallies, of course, it got smothered earlier this week. And that's where I still lean a little bit more towards kind of a bearish interpretation of the week, because we're at the highs on a 5-day basis, but we're at the lows on a year-long basis for the NASDAQ.
All right, Meta at the highs of the day. Meta.
Tesla's going to play a big role in that. And you said Tesla got hit this week. Oliver, it got hit this morning. It was down significantly. Yeah. So this is a great comeback on the day for Tesla.
It had a bad day.
Meta clearing pivots.
Tesla was very heavy on those cost cuts. But we talked about that with Caroline Woods today on Fast Market about Tesla can maybe afford some price cuts that won't overly hurt margins, right? I think this is Tesla pressing the edges of what they can do. We'll see if it works, because last time I checked, Tesla didn't get really judged on margins. It got judged on how many cars it sells. And if these price drops help them sell cars, that's better for the overall stock, Oliver.
Okay. All right. The other thing, too, I think on a stock-specific basis worth mentioning today, Costco news on the sales. Target's up 9 days in a row. Pretty good little bounce for Target. Nice bounce for Costco. And this is happening as the services data surprised really.
Profit taking.
We kind of had a little counterpoint to that with some of the Costco numbers suggest the consumer is still spending.
Now, good market, bad market, that's the story of Costco, isn't it? In a good market, it does well. In a tough economy, it might even do better, Oliver, because more people go towards the low prices of Costco, much like Walmart when you get a struggling market. But their 70% increase in December sales, $23.8 billion, that is just Costco continues to outperform. Now, Target, that's a little different story, right? This might be, Oliver, in Target, anticipating some better news on margins. Remember, when they missed a few quarters ago, they had a lot of inventory to get through, dropping margins down to 1.5%. So they said later they could get to 6%. It looks like that's starting to come to fruition, Oliver, because this stock is certainly acting like margins are back where they're supposed to be, which means they got through a whole bunch of inventory.
Okay. All right. So Bulls get a little hope here. That would have been no fun if we just crashed the first week, right? We could keep it interesting this way.
It's still time to ruin your Christmas, Oliver, but not today.
Yeah. All right, Christmas. As long as you didn't, if you flew Southwest, that case is already closed. All right. Thanks, Kevin. Appreciate it, sir. The host of Fast Market, Kevin Hanks. Let's bring in Amy Glazer joining us from the team at Ideco, SVP, covering North America. Let's talk some economic data. Amy, thanks for being here this afternoon. This jobs print this morning, let's start there, because we had a little bit of a mixed bag. We had this great jobs print, and then we had a really shockingly bad services number. Let's start with the jobs. How do we interpret it?
So, Oliver, the word that keeps coming to mind to me is consistency. We keep seeing on the ground what's reflected in the jobs report, and we're still seeing it's a candidate-driven market. Openings are still outpacing candidates, and the candidate truly is still...
All right, profit taking coming in.
So at this point, when we see participation go up, are we getting more people entering, but employment goes down? So there's just a strong absorption of candidates right now. Does that mean we have a good match between what's open and who's available?
I think we've been focusing a long time on upskilling and reskilling and really trying to find that balance of where the job openings are and where the talent sits. And I think we're starting to see that come into line, and hopefully we're reaching this point.
SPY right at the 50-day, getting rejected, first shot.
Employees are still willing to absorb talent. They're focused on retaining the current great employees that they have. And I forecast we'll still continue to see the next couple of months it be that tight labor market.
Okay, Amy, where does this leave the Fed? I mean, our backdrop for interest rates. It seems like if things are going pretty good according to the employment situation, should we get some more what the Fed's got? I mean, everybody's complaining, but it seems like we're kind of threading the needle.
Yeah, so I couldn't tell you all around, not an economic expert, but what I can tell you is that I think employers have been doing the right thing in terms of looking at wages and looking at extra.
All right, profit taking. Let's see if we hold this up a little bit more.
From employees that they're concerned with wage inflation and that they may not have enough to actually heat and eat over the winter. So we've got this balance of some employees for the first time in history looking for secondary jobs. In fact, the workforce survey report we just released stated that over 51% of the American population was willing to look for a second job. So good news is those job opportunities are out there. Advice for employers would be that they've got to be flexible, and if they truly need the talent, they're going to have to get creative in how they attract them.
Mm-hmm. So if we're looking at the themes for this coming year, is it still about reopening services? Where is the meat of the activity going to be happening?
Yeah, so we're seeing a huge push in hospitality and leisure. I sit here in sunny Jacksonville, Florida, and we're gearing up for spring break season, and we continue to see across the U.S. hospitality, leisure will still continue to spike. Healthcare is hot; it will continue to do so.
All right, so it looks like about 6 minutes of profit taking. They're picking up shares right here, short covering on that little blip down.
So where is the activity? Is it still in the places that people build out from the cities to go to? Texas, Florida? Are these the hotbeds this year?
I think we're still seeing hotbeds, Texas, Florida, middle part of America. The supply chain pressures are starting to lessen a little bit. So I think we're also seeing a little bit of a return to work take place, and it's happening in a positive manner. I think a lot of employees are really embracing that sense of community, and although we're not back to full-time, in-person, everyday work, we are seeing a bit of a shift from fully remote work to that kind of hybrid work.
All right, Amy, really good info and thoughts here on the labor situation. Seems like it still remains the top priority here for us in engaging the sustainability of this recovery. Thanks a lot for being here.
Thanks, Oliver.
Absolutely. Amy Blazer joining us from Adecco. Services components still going to be the main story this year, and particularly the hospitality side as well. Numbers continue to be solid. What's the problem with people complaining about the Fed? It seems like things aren't going to hell in a handbasket after all. All right, stocks over 3% higher here for the NASDAQ. When we come back, we're going to take a look at internet-related themes.
Taking profits on some positions, reducing my size. Looking for Chinese stocks to follow through next week, reducing my hedges, doing all that today. As we test the 50-day, a close above the 50-day would be awesome for a SPY. Pretty much, the day is pretty much done now. We've got 35 minutes to go for the closing bell.
We explore what implied volatility is, how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish. So looking beyond direction to consider the impact of implied volatility can help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in applied volatility. Iron condors, on the other hand, are designed to benefit from falling applied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the education tab on Thinkorswim for the full options for volatility course and a whole lot more.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange, new location with access to
Looks like a bear flag.
Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investment. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Let's talk holiday spending and where the money went. Joining us, a very interesting group of companies covered by Shweta Kajuria from Evercore ISI, Director of Internet Equity Research. Shweta, your group includes Peloton, companies that are more pure online shopping outlets. What emerged the winner? Is it obvious yet from the holiday spending?
first of all, thanks for having me. Within the e-commerce landscape, we have Amazon, we've got eBay, we've got Etsy, we've got Peloton. There's also Shopify, not as an e-commerce marketplace, but also related to e-commerce. So and then there are parts of real, the offline retail like Walmart and Target also have online presence. So as a whole, it is not clear just yet. Numbers for holiday sales have been out. Adobe said that they estimate about 3.5% year-over-year growth from holiday sales in 2022. MasterCard has a slightly higher number of about 10% year-over-year growth in holiday sales. So it's a wide range, but even if we take it at a midpoint, it's about 8%, high single-digit percentage growth of holiday sales. What we do see, however, is Etsy actually is holding up really well. So we looked at our proprietary survey data as well as some of the intra-quarter data points that we looked at in terms of how much consumers have been using Etsy as a platform during the holiday season, and it's trending really well for at least for the fourth quarter.
Interesting, because Etsy is one of the stocks that over the last year just got pummeled following a really good COVID performance. Obviously, same thing happened to Shopify. Same thing happened with Amazon at the end of the day. But one of the things I wondered about Etsy was whether or not the pricing down of consumers into less expensive goods was going to hit Etsy hard, and some of the items are kind of like more bespoke. Are they not more expensive? Because the Etsy chart relative to a lot else the last 6 months actually looks okay.
Yeah, absolutely.
All right, looks like a little bit more fade going on with the SPY, more profit taking. We're up 90 handles. 90 handles on the futures. Let's see how much they give back of this, if at all. And we're right at the 50-day, so I'm not surprised we're getting rejected.
In terms of the consumers wanting a lower priced item or looking for discounts, etc., I'll point to two things. One is that the average order value on Etsy is not that high. It's generally around $50 to $60. It's not, one of their biggest categories is home and living, which is furniture, etc. But when you average it out, it's around that range of $50 to $60. So that's one. Second is that Etsy sellers these are sellers who are predominantly women who have less than 5 people as employee count and are doing that as kind of either part-time or full-time, but not for, multi-million-dollar business at scale or anything like that. The point being that they are not as impacted by inflation as we've seen.
All right, so low profit taking, now they're reversing it. Okay.
They did not raise their prices as much. And so the consumers are liking the experience on Etsy's platform. They're enjoying what they're buying because it is very different and unique that is not available necessarily on a platform like Amazon, for example. Having said all that, we do have an outperform rating on Etsy, but we also have a tactical underperform because I think that as we lap, Q4 and get to Q1, the estimate that there's a legitimate risk.
Hi, took alert plus 800.
Risk of consumers starting to spend less, not only on Etsy, but across the board, more so than we have seen in the past.
Interesting. Okay, so a little bit of a difference between the short-term potential for some headwinds, long-term staying power that Etsy's prices have demonstrated. What about the case for Shopify is another here, Shweta? I mean, it's clearly the loser in this group, down almost 70% the last 52 weeks. One of the things that the CEO said at some point over the COVID period was that they're not going to have the same style of aggression that Amazon did. They're not going to try and
Nice rally back to the highs.
competitor and bring margins as tight as they possibly can. But can they exist in this world then? They don't.
Well, just full disclosure, I'm not very.
Give you another opportunity to take some profits off after a really big day today. Futures surging back up to the highs. We're up 96 handles.
The question is it a good decision from an investor standpoint for them to get to logistics and compete with, someone like Amazon, or is it better for them to just not take that kind of capital-intensive investment and partner with someone like an Amazon for their service? And so I think that is a huge determining factor for Shopify. But the value proposition, there's still hope.
Got it. Okay. Thanks for that. And my apologies. Didn't realize it wasn't just kind of a natural transition when you're talking Etsy. Group that you do cover that I've been perplexed by, maybe you have an answer, is the dating apps. You do cover these online, and there's commerce on them now, of course, as people pay for subscriptions. How come a stock like Match, I mean, Bumble too is down, but not as much. How are these stocks doing so bad the past year? I mean, I thought people were just going back out again, in 2022. How do these stocks crash when we're finally out and partying again?
Yeah, they should. I mean, logic does bring us to a reopening beneficiary being rematched with Bumble. I guess I can take one at a time, but Match underperformed significantly more than Bumble over the past year in 2022. And a lot of it was not as much macro-related COVID reopening beneficiary or seeing headwinds, but it was more company-specific. They had management challenges at Tinder.
All right, take the opportunity to take some profits off, folks. We'll reassess the markets next week. Had some nice gains today. You know that institutions are going to take some profits.
So that really, in this step by the company over the past, call it, year or so.
Paramount trying to take out the high today. Paramount.
Now becomes what from here has the stock bottom, or is this a secularly declining?
Looks good on the daily time frame. Paramount, as well as the 2-minute chart. The volume here suggests institutions are picking up shares over the last 7 trading days. Looking for the follow through. The price action's moving away from VWAP. VWAP's up and to the right. That's what you want to see. And relative volume looks really good.
So there's this continuous addition of users that are wanting to pay, and then the challenge is when times are tough and potential risk of losing your job. This is not top of mind, and maybe they don't spend as much. So there is that headwind that both companies are facing.
I see. So it's an expense that's maybe a little higher on the chopping block than some of the other stuff. Very interesting. Love the analysis here. We hit a lot. Shweta, thanks a lot. Looking forward to following up on the discussion. Yeah, absolutely. It will be interesting to see if some of these stocks come back this year. I mean, that's the hope, that we've still got the e-commerce world under deep pressure. That's not going to say much good about the overall stock market. Really important companies here. COVID-specific companies, too, that have unwound in the last year. Options trades when we come back. 2 bullish and 1 bearish from Tom. Look at that. You're getting an up day, and we switch. It's been 2 bearish. Now it's 2 bullish.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our portfolio management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more. Best of all, you can ask questions by chatting directly with an education coach.
SPY's still hanging out just below the highs of the day. I would take the opportunity. I'm taking the opportunity and selling, taking some positions off. If you took off Boeing earlier, Boeing. Still driving higher, but off the best levels of the session. So, selling all up along in here, you might not get the exact high of the day, obviously, but good profits for the week for Boeing.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience pushes you to be even better. It just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Oh, yeah.
Have you downloaded the TD Ameritrade mobile app?
Actually, I'm taking one less look at my dashboard before we board.
And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set.
Choose the app that fits your investing style.
I'm Nicole Fedelides, live on the floor of the New York Stock Exchange, empowering investors every single market day. Tune in to the TD Ameritrade Network.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy. A measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
Big up day, and suddenly Tom's options corner has turned bullish. All right, we got two bull trades, but I'm gonna spoil the party. Let's start with the bearish one.
Yeah, I like EEM. I like emerging markets as well.
See massive size option trades in whether it's Marriott, Hilton, or in this case Hyatt. These
Just about to break through this level.
all-time highs about a year ago because demand was so robust coming out of the pandemic, and that made these
EEM looks good.
a lot of retail investors and institutionals. They paid decent dividends, but if you look at the strong performance, will that start to make people trade down a little bit with inflationary pressures, savings getting whittled away? You made your trips now, but these things have held up pretty well. Morgan Stanley just recently initiated this Hyatt as this top pick in this asset light fees. Free cash flow is pretty solid on these companies. But that being said, shares are up over 2% today, flat on over the last year. Been in a range of about 80 to 100 over the last 5 months. Somebody thinking that, hey, maybe these hotels are due for a pullback. Remember, hospitality and leisure, that jobs report, Oliver, over the last few jobs reports, those are the majority of the jobs that are getting hired. So they're playing catch up because they didn't have enough people working for them throughout the pandemic and when we came out of the pandemic. So leisure and hospitality, hotels have been hiring a lot. Is that going to weigh on their results in the coming quarters? Somebody's making a bet that this stock is going to take a hit here all the way out into the May cycle. A trader bought 4,000, the 80 strike puts for a debit at 275. So that break even of 77.25 over the next 133 days, about 18% below the current share price here in Hyatt. Only 43.
All right, looks good. EEM, emerging markets.
Classes across Hyatt's, months and weekly cycles. So this 4,000 lot, it's a pretty big size. It's the majority of the size. 27 times normal daily average volume over the last 5 trading sessions in Hyatt. So somebody taking a bearish bet, going all the way out to the May cycle, though, giving themselves about 5 months here.
So 5 months, you get some time after this morning's services print. There is some question here, I think, about how much buying power there's left. That was not supposed to go contractionary as it did. I think that's going to go a little bit overlooked here. To Kevin's point, strength started this morning when we had the employment report, which did kind of thread the needle nicely, participation up and unemployment down. However, we really turned on the rockets, okay, for this thing to get really juiced when ISM came in super low. Which is the old bad is good situation. And to me, I don't know, that's a very risky bet right now that we want to root for that. If the best the economy's got going is people spending on vacation stuff, and they might have just blown whatever's left of their savings the last 2 months.
Right. If you see a pullback, because that was one of the big inflationary pressures was the services side of the industry, right? And we were
EEM is going right here.
to pull back like the manufacturing numbers into contraction territory. First time we've been in contractions since May of 2020. So, yeah, this is a positive number, but that term soft landing keeps on popping up throughout today's session. If we still have robust, job growth, economy stays relatively healthy, wages aren't going up as high as expected, maybe people will pull back on their spending moving forward. And if you look at the price of hotels, Hyatt's one of the medium-term ones. It's still.
All right, the dollar, the 10-year, the VIX, all dropping. That's bullish for equities. Okay, emerging markets looks good. EEM. Emerging markets just grinding away. Taiwan Semiconductor is 6.6%. All right. We have 16 minutes to go for the closing bell. 16 minutes. This is your host, Cousin Vinny, coming to you from theclosingprint.com, Friday the 6th of January. I'm a little quiet at the moment. I got a really bad headache, so I'll be here with you the next 15 minutes or so. What a day. What a day. We haven't had one of these in a while. We've had them on the bearish side, but not on the bullish side. It's just a headache. No big deal. I just overdid it last night. That's all. Emerging markets. Still, look at the volume end of day on EEM. little profit taking there. Having a good day. We're up over 2.25%, so it's pretty good week and a pretty good day. Less than 3 minutes to go for the closing bell. Just below the high of the day, FXI, Chinese stocks.
High took alert plus 800.
That's the closing bell. That's a wrap for me. All right, folks. Like I said, I have a headache, so I'm going to cut it short. Have a great evening, everyone. The weekend video will be out on Sunday around 2 p.m. We'll see you then. Otherwise, have a great evening. Thanks for sharing. Everything that you did this week was great. Nice way to finish the week. Really appreciate everyone's posts. You know who you are, all the participants in the trading room. And welcome to the new members. Take care. We'll see you on Sunday. Ciao.